Come to your ICAI study mat, and in ICAI study mat, you can see illustration number 1. Come on. In this illustration, what you are supposed to do, friends? Here, you are supposed to calculate the GOV. I will read this example first. Please pay attention. See, Jaishri owns 5 houses in India. Jaishri is having 5 houses in India which are let out. All the properties are let out properties. Yes or no? Compute the GAV of each house from the information given below. So for each house, municipal value is given, fair rent is given, standard rent is given, and even the actual rent received or receivable is given. So you are so lucky that they are not saying that this is actual rent for 10 months and there is 2 months of vacancy. Or this is actual rent for 9 months and there is 3 months of vacancy. Even that particular information can be here. But right now we are supposed to assume that the property was owned for the full year. So these figures are given for full year. Expected rent will come for full year. And since there is no discussion about the vacancy, what we will do? Assuming that this actual rent is for the entire year, because entire year the property is let out. Hello. So actual rent is given for the full year. Expected rent is also for the full year. Whichever is higher will become your GAV. Yes or no? So I want all of you to please pay attention. Okay. And first one, municipal value or fair rent, whichever is higher, 90,000. Then compared with standard rent. Ayyo sir, standard rent not given sir. What to do? If not given, then higher amount will be expected rent. Hello. So what will be your expected rent here? 90,000. Okay. And can I say this is your actual rent? Now, is there any vacancy? No. So what? Expected rent or actual rent, whichever is higher. 90,000. First answer, I hope you all got. Second one, 55 or 60, whichever is higher. 60. 60 or 75, whichever is lower. 60. 60 will become your expected rent, and this is your actual rent. So 60 or 72, whichever is higher. 72 sir. Sir, 65 or 65, whichever is higher. 65 only. Hayo, any 65 you take, that is higher only, no? Next one, 65 or 58, whichever is lower. So this will be your expected rent and this is actual rent. So here it will be 60. 25, 24, 25, 25 not applicable, meaning this is your expected rent, this is actual rent, this will be GAV. Sure. And last one, 80 or 75, 80. 80 or 78, 78. Expected rent 78, actual rent 72. 78,000 will be your GAV. Sure. Any problem here? Perfect. Now should I complicate this thing a little bit? What if vacancy was also given in all the cases? So this actual rent would not be for 12 months. It would be for example, 2 months vacancy was given. So this actual rent was for 10 months. Hello. So 10 months actual rent, you will directly compare with expected rent, whichever is higher. No. Now vacancy period rent also you are supposed to calculate. And you are supposed to add AR plus VR. If that is, see, wait, if vacancy is there and still actual rent is higher or equal, then we will take actual rent. And if vacancy is there and actual rent is still lower than expected rent, then we will add vacancy rent also. So those type of things also we are going to see in the questions. Okay, no? So here they could have given you vacancy also. So how to do it? Those things we are going to do in the main questions. Right now, did you understand how to calculate GAV? Should I move ahead? Page number 3.151. ICAI study mat. Illustration number 4. So in this question, a simple question is there. They have given you let out property without any vacancy. And now from that property, what is the taxable income which you are supposed to calculate? Sure? Shall we start now? First question I am solving with you, okay? Come on, see. Anirudh has a property whose municipal valuation is 1,30,000 per annum. Fair rent is 1,10,000 per annum. Standard rent is 1,20,000 per annum. Property was let out for a rent of 11,000 per month throughout the previous year. Meaning that from April to March the property is let out. Can I say the status of the property is LOP? Throughout the previous year means there is no vacancy. Okay. Unrealized rent was 11,000 and all conditions prescribed by rule 4 are what? Satisfied. Meaning that this unrealized rent you can claim as a reduction while calculating your GAV. From where we will reduce? We will reduce after calculating GAV. We will not reduce from actual rent. Okay, everyone. But alternatively, it can be reduced from actual rent also. Your GAV will be a little bit different. You will still get the full marks, but that will not be a logical answer. Hello, we discussed in the last lecture. Do you remember that? Okay. Now, he paid municipal taxes. See, they are saying he paid means who paid? Anirudh paid. Anirudh is the owner. And owner has a paid, meaning actual paid. Yes or no? Municipal taxes at 10% of municipal value. Hello? Interest on borrowed capital was 40,000. Meaning interest on housing loan. It is 40,000. Now tell me one thing. Whatever interest is there, is this interest for this let out property? Yes, that will be allowed fully. Very simple question. Very simple. What we are going to do, we are supposed to take municipal value 1,30,000, fair rent 1,10,000, whichever is higher, 1,30,000. Yes or no? Then we will take standard rent 1,20,000, so higher amount 1,30,000 or standard rent 1,20,000, whichever is lower. So can I say my expected rent here will be 1,20,000, friends, everyone. And what will be my actual rent? Actual rent will be 11,000 per month into 12 months let out period. Yes or no? Will be 1,32,000. Everyone got this? Was there any vacancy? The answer is no. If there is no vacancy, actual rent or expected rent, whichever is higher. Higher is GAV. Come on, tell me, what is GAV now? 1,32,000. Now, out of this 1,32,000 GAV, we will reduce our unrealized rent amounting to rupees 11,000. Yes or no? So, our balance GAV, which will be finally taxable in our hands, will be 1,21,000. Everyone got this? From there, we'll get municipal tax deduction. How much is municipal tax? It is 10% of municipal value. What is municipal value? 1,30,000. 10% of that will be 13,000. So reduce this 13,000 out of 1,21,000. You will get 1,08,000. Can I say my NAV is now 1,08,000? Now I will get two deductions out of this. One is 24 clause A, standard deduction. Yes or no? 30% of 1,08,000. That amount will be 32,400. And another deduction I will get 24 clause B, interest on housing loan. Yes or no? How much is interest? 40,000, no? Entire amount will be allowed as a deduction. So if I reduce 40,000 also, I will get final answer 35,600. Can I say this is the taxable positive income? This is taxable income from this house property. And since Anirudh does not have any other house property, so whatever taxable income of this house property is there will be the taxable income under the head house property also. Hello? Can you please check the answer, friends? Final answer. This 35,600. Yes? Yes or no? Final answer. Now please pay attention what I'm trying to tell you here. We reduced the unrealized rent while calculating GAV from the amount of GAV we reduced. Alternatively, it can be reduced from actual rent also. So if we would have reduced from actual rent, what would have been our answer? It would have been same because they have also reduced from actual rent. Please pay attention here. We got expected rent of 1,20,000. We also got it now. So here what they have said, actual rent which was 1,32,000. From this actual rent only they are reducing unrealized rent, so that final actual rent for them is 1,21,000. Now if you see expected rent or actual rent, whichever is higher, how much is that? 1,21,000 GAV. So for us also GAV was 1,21,000 only, no? So if we reduce from unrealized rent, if we reduce unrealized rent from GAV, then also final GAV taxable was 121. Here also it is 121. But sometimes this amount may differ. Huh? Sometimes this amount may differ. But this time it is fortunately same. Getting my point? In both the ways, our answer is correct only. Why? Because see, they have written alternatively, if as per the income tax returns, unrealized rent is deducted from GAV, then GAV would be 1,32,000, which came in our case also. GAV was 1,32,000. Out of that, 11,000 is reduced. Then thereafter, unrealized rent and municipal tax 13,000 would be deducted to arrive at the NAV of 1,08,000. Then from that NAV of 1,08,000, we are taking what? Two deductions, and our final answer is getting, we are also getting 35,600. So what we will be doing, we will be reducing from GAV, and we will write a note that in the above solution, unrealized rent we have reduced from the amount of GAV as per the treatment given in income tax returns. Alternatively, it can be reduced from actual rent also. Full stop. That's it. No need to make further calculations also. Getting my point? Hello? Shall I move ahead? Next question. Come on. Next question. Question number 5. Now this is a case where property is let out, but there is vacancy also. Okay? Come on. Ganesh has a property whose municipal valuation is 2,50,000 per annum, fair rent is 2 lakh, standard rent is 2,10,000. So can I say expected rent here will be 250 or 2 lakh, whichever is higher, 2,50,000, 250 or 2,10,000, whichever is lower, this will be 2,10,000 expected rent. Now actual rent here is the property was let out for a rent of 20,000 per month. So the property is let out and the actual rent is 20,000 per month. However, the tenant vacated the property on 31st of January 2025. Meaning that from April till January, for 10 months the property is let out, and for the rest 2 months the property is vacant. Yes or no? So 10 months is the let out period, multiplied by 20,000. Actual rent will be 2 lakhs. Everyone? So now tell me, there is vacancy and there is unrealized rent also 20,000. Now I have two options. I can reduce this 20,000 from actual rent also, or I will first calculate GAV and from GAV I will reduce unrealized rent. Yes or no? So what we will do? First we will calculate GAV, and from GAV we will reduce what? 20,000 of unrealized rent. Okay. Now tell me, is your actual rent higher than expected rent? No. If even after vacancy your actual rent was higher than expected rent, we would have taken actual rent only as GAV. Hello? But since your actual rent is lower than expected rent, so I will have to now see whether the reason for actual rent being lower is vacancy or not. So I will have to add 2 months vacancy rent in the actual rent to check that. So how much rent I would have received for those two vacancy months at the rate of 20,000, I would have received 40,000. Hello? That 40,000 plus this 2 lakhs will give me 2 lakh 40. After adding vacancy rent, I came to know that if I would have let out the property for entire 12 months without that 2 months vacancy, I would have received a rent of 2 lakh 40. That was more than your expectation, sir. That means vacancy is the reason why my actual rent is lower than your expected rent. Hello? So in that scenario, if AR plus VR is greater than or equal to ER, what I will take as GAV? I will take actual rent only as my GAV. Hello? So here my GAV is equal to 2 lakhs only. I will not take 2 lakh 40. 2 lakh 40 is what? Just for the sake of comparison. Yes or no? Either actual rent or expected rent. Any of these two amounts will only become my GAV. Yes or no? Now tell me. Out of this GAV, now I will reduce unrealized rent. That was how much? 20,000. And all the conditions of what? Rule 4 are satisfied. That is why I am reducing this 20,000. So my balance GAV, my final GAV, which is taxable, is how much? 1,80,000. Everyone understood? Now out of this, I will get a deduction for municipal taxes, which are 8% of 2,50,000. 2,50,000 into 8%, that is 20,000. So 20,000 municipal tax I have reduced. My NAV will be 1,60,000. Everyone, out of this I will get 24 clause A standard deduction. So 1,60,000 into 30%, I will get 48,000. Is there any interest on housing loan? Yes. Interest on borrowed capital was 65,000. So 24 clause B, interest is 65,000. Reduce this. Minus 65,000, I will get final amount 47,000, positive amount. This is the taxable income from house property. Everyone got this? Sure, friends? You did not get this answer. Where you committed mistake? Akshaya. Follow the process blindly, I am telling you. If you will try to do anything else, your GAV would be wrong, I guess. Yes or no? Come on. Shall we move on to the next question now? So this is the place where you should actually focus. Got it? This is a very easy question. Now the difficulty of the questions will increase. So today at home, sit properly, read this question again and start solving again. How to solve? Make a format, name of the assessee, individual, PAN, previous year assessment year, computation of taxable income from house property. Particulars, we know the format. For LOP, what was the format? Municipal value fair rent. Write down the entire format. Now from here only, take the amounts and put in that format. Got it? Now be careful that when you are comparing expected rent and actual rent, no, at that time, if there is no vacancy, whichever is higher. But if there is vacancy of 2 months, which was given in our question, vacancy is there and my actual rent is for 10 months, which is only 2 lakhs. And expected rent is for 12 months, which is 2,10,000. So actual rent is lower than expected rent, no? What did sir taught us in this scenario? What is to be done? I am not recollecting. Go in the notes, check the notes and again come back to this. Now again solve. Sir said that when actual rent is lower than expected rent, I will have to add the vacancy period rent in the actual rent. So actual rent plus vacancy rent both taken together, if this total amount is equal to or higher than expected rent, then I have to take actual rent only as GAV. But even after adding the vacancy rent, the total is still less than expected rent, then actual rent I will ignore. I will take expected rent as GAV. That's it. Sure? Here only you would have committed the mistake. And once you get the GAV, from that you take the unrealized rent. Alternatively, it can be reduced from actual rent also. So in that case, your actual rent would have been 2 lakh minus 20,000, 1 lakh 80. Then you again add what? Vacancy period rent, 2 lakh 20. 2 lakh 20 is still higher than 2 lakh 10, no? So actual rent of 1 lakh 80 will be taken as my what? GAV. If I would have reduced unrealized rent from actual rent. Got it? And here also I am getting what? 1 lakh 80 only as my GAV, no? If I reduce from reduce unrealized rent from GAV. Getting my point? Sure. Shall we move on to the next question? Come to question number 3 now. Question number 3. Now this is a question where two SOPs are there. Wait. Please listen to me carefully. Two SOPs are there. And both the SOPs have interest. And in the question they are mentioning that the assessee is shifting out of 115 BSE. If you shift out of 115 BSE, will you get interest deduction? Yes. If you shift out of 115 BSE, you will get interest deduction from SOP. But if you remain in 115 BSE, you will not get any deduction for interest. Hello? Just now only we have done, no? See, if one question is wrong, no? Don't worry. It happens. With everyone it happens. Okay? Even I did not learn at my first, at my first attempt. Even I did not learn. I had to do it again and again. Only then I learned. So if in one concept I am doing a mistake, that does not mean that my entire chapter is gone. Have that confidence. Okay, this point, no, I committed mistake. I know other points. Have confidence in that. Got it? Please pay attention. Now, in this question, they are telling you two SOPs are there. Both the SOPs are having interest on housing loan, interest on housing loan. Will you get any deduction for interest on housing loan if you shift out of 115 BSE? Yes. Then from SOP, whatever interest is there, you will get the deduction for that. Maximum 30,000 or 2 lakh as the case may be. But if you don't shift out, you remain in 115 BSE, you will not get any deduction for interest. Interest deduction will be 0. Then your SOP final income will be 0. But what if you shift out? Will you get interest deduction? Yes, maximum 30 or 2 lakh as the case may be. Then your SOP income will be negative. Got it? So in the question, see, I have highlighted, they are saying that if he exercises the option of shifting out of the default tax regime, meaning that is he following 115 BSE or not following? Not following 115 BSE. If not following 115 BSE, interest on housing loan deduction will be available? Yes. So calculate that interest on housing loan deduction they are telling you. See, compute the deduction which would be available to him under section 24B in respect of interest payable. They are telling you to calculate the interest on housing loan deduction which is available because you are not following 115 BSE. But if they would have kept the question same and told you that he was following 115 BSE, then your answer should have been directly nil. Got it? Everyone? Shall we? Come on. See. Mr. Manas owns 2 house properties, one at Bombay wherein his family resides. Bombay, his family resides means self-occupied for residential purpose, Bombay house. Other at Delhi which is unoccupied. Unoccupied means remaining vacant. So the property which is self-occupied but kept vacant is also SOP only, no? So Delhi property is unoccupied, that is also SOP. Bombay property where the family lives, that is also SOP. 2 SOPs are there, Delhi and Bombay. He lives in Chandigarh. Oh, third place, Chandigarh. For his employment purpose in a rented house. Thank God in Chandigarh he is not having his own house. So Manas is having only two houses which he owns. One in Bombay, one in Delhi. And both the houses are SOPs. Yes or no? Chandigarh is the rented house. He is not the owner of that house. So forget about Chandigarh house. Chandigarh house will not come under the head house property because it is his rented house. He does not own that house. Getting my point? Next one. For acquisition of the house property at Bombay, he took a loan of rupees 30 lakh at 10% per annum on 1st April 2023. He has not repaid any amount so far. In respect of the house property at Delhi, he has taken a loan of rupees 5 lakh at 11% per annum on 1st October 2023 towards repairs. Very simple. Now from these informations, they are telling you to compute the interest on housing loan deduction available for house 1, house 2 and the total deduction available under section 24 clause B. Getting my point? SOP1, SOP2 both taken together cannot be more than 2 lakh. Do you remember? That same concept is there. But wait, how will you present it? Okay, now see, can I say SOP at Bombay is there and another SOP at Delhi is there. Sure? Both the SOPs, the GAV will be nil. And from that, interest on housing loan deduction will be there. Then the final amount will be a loss. But they are not telling you to calculate income from house property or loss from house property. They are telling you just calculate the interest which is available for these two taken together. Yes or no? But in that same question, if they would have told you compute the house property income, if you are having these two houses, then simple, GAV nil, municipal tax nil, NAV nil, minus 24 clause A nil, interest on housing loan which you are going to calculate now, take that as a deduction and final income will be negative. Hello? Getting my point? Sure? So what we are going to do now, we are supposed to calculate, we will be calculating as if they have told us to calculate the final income of these two properties. And ultimately in that, there will be a working note for interest on housing loan deduction also. Yes or no? So both the purposes will be solved. Getting my point? Wait. So I will take GAV. For this property also I will take nil. For this property also I will take nil. And you will have to write down a note that annual value of any two SOPs at the option of the assessee is exempt under section 23(2). Hence, the GAV of both the properties belonging to Manas has been taken as exempt. Taken as nil. Yes or no? Can you write down such type of note? Minus any municipal tax paid, even if it was paid, was not allowed as a deduction because municipal taxes relating to the property for which the SOP exemption is claimed is not allowed as a deduction. Yes or no? So here I will have to take nil. I will have to take nil. No municipal tax deduction also. Okay, sir. Now I will take NAV. How much is NAV? Nil minus nil on your calculators, please. How much you are getting? Nil minus nil. Are you getting nil? Sure. Now take 30% of that nil. 24 clause A said 30% of NAV, 30% of NAV, nil, 30% will be how much? Nil only, no? Now minus here 24 clause B. They are not telling you to compute the house property income. They are telling you that how much deduction will be available under section 24B. That is the question asking from you. Getting my point? But we are solving as if they are asking us to calculate the loss from each property. Got it? So 24B, how much deduction will be available here and how much deduction will be available here. But we have to remember, both these taken together cannot be more than 2 lakhs. Both taken together cannot be more than 2 lakhs. Hence, whatever loss will be coming that loss from both the house properties taken together cannot be more than 2 lakhs. Yes or no? So now come. See, SOP1, what was the interest? Interest on housing loan which was taken for Bombay property. The loan was taken on 1st April 2023. Please check the question. What was the amount of loan? 50 lakhs. On that 10% interest was there. Hello? So 50 lakh into 10% will be 5 lakh. Can I say if that loan is, 30 lakhs. 30 lakhs, no, it was 30 lakhs. 30 lakhs. On that 10% will be 3 lakhs. So if nothing is mentioned, then that 30 lakh is entirely outstanding. Yes or no? But they have mentioned it clearly that that loan is still outstanding. Can I say in my previous year, the loan for Bombay house property, entire year that loan is outstanding? On that 30 lakh, I will have to give interest for this year amounting to 10%, meaning 3 lakh rupees. So can I say this 3 lakh rupees is interest for this year for Bombay property? And Bombay property, this loan was taken to purchase Bombay property. Tell me, the loan was taken on 1st April 2023, meaning that after 1st April 99, to purchase or construct, meaning purchase of house property. If nothing is mentioned, purchase happens immediately, no? So within 5 years, the purchase activity got completed. So loan is a normal loan or a special loan? Special loan. On that, the interest will be 2 lakhs maximum. So maximum amount of interest under section 24B for this loan will be, this loan interest will be 2 lakhs. So 3 lakhs or 2 lakhs, whichever is lower, your interest deduction here will be 2 lakhs. Got it? Now they are saying that this Delhi property is there. Delhi property, you have taken a loan of rupees how much? 5 lakhs, no? At the rate of 11% last year. And even that loan is outstanding in this year. So on 5 lakh, 11% you will calculate, you will get 55,000. Can I say this 55,000 is interest on housing loan which was taken for repairs? It is given there. So repairs loan maximum interest will be how much? 30,000, no friends. So 55 or 30, whichever is lower, you will get 30,000. Everyone. But wait, if you write 2 lakhs over here and 30,000 over here, don't you see both taken together exceeds 2 lakhs? So here your loss will be 2 lakh and there your loss will be 30,000. Getting my point? Both these taken together cannot be more than 2 lakh, meaning that if you are claiming this 2 lakh, you will have to forget that 30. Or if you are claiming this 30, you will have to forget 2 lakh, you will have to take 1 lakh 70. So that the total loss does not exceed 2 lakh also. Getting my point? So tell me, if I'll claim 2 lakh or 30, yes or no? 2 lakh or 30, the total will be 2 lakh 30, which cannot be more than 2 lakhs. So this or this, whichever is lower. So total interest for both the SOPs taken together cannot be more than 2 lakh. So the loss under the head house property will be now how much? 2 lakh rupees maximum. This way, can you present your answer? Sure, sir. Easy, no? Very good. Come on. Now let's come to the... Now wait. In that question only, should I twist a little bit? In that question, if they are telling you that assessee is following 115 BSc, shift is not shifting out, he is following 115 BSc, then you will go here, you will not write down these limits. Okay, first you will calculate what? Interest. First you will calculate interest and you will put these interest in the box and you will say disallowed since assessee follows 115 BSc. Yes or no? Since assessee follows 115 BSc, both are disallowed. Hence, here also interest will be nil and here also interest will be nil. So my dear friends, here it will be nil, here it will be nil, there will be no loss, final income from the both the house property will be nil only. Got it? Sure. Let's move to the next question. Come on, illustration number 3 is done. See, question number 2 is pending. 2 I will pick up a little bit later when I will teach you house property is situated outside India. That time we'll do question number 2. So 3 is done, 4 is done. Everyone, 3, 4 done and 5 also done, no? 3, 4 is also done and 5 is also done. Okay. Now illustration number 6. Good question. Now in this, SOP and interest is not there. SOP and pre-construction interest is also there. Okay. Shall we start? Purna has one house property at Indranagar in Bangalore. She stays with her family in the house, meaning the house property is SOP. Okay. Next one. The rent of similar property in neighborhood is 25,000, meaning this is fair rent given for the property. There is no use of this fair rent to me. I would have used this fair rent if the property would have been what? Let out property, no? Hello? If the property is SOP, fair rent, standard rent, municipal tax, whatever given for this property will become irrelevant for me. Even the municipal taxes paid for this property will not be allowed as a deduction. So why they have given? They have given all such information to confuse you. Getting my point? So don't get yourself confused. Okay? Come on. Municipal value is 2,80,000 per annum. No use. Municipal tax is 8,000. No use because the property is SOP. Now, whatever information is there, this is important. The house construction began in April 18 with a loan of rupees 20 lakh taken from SBI housing at 9% on 1st April 18. So this house you constructed by taking a loan. But the construction of this house you started in 2018. On 1st April you took a loan to construct this house. So date of borrowing was 1st April 2018. Yes or no? On 1st April 2018, you were not having this house property. This house property was under construction. So can I say that in the previous year, 2018-19, 1st April you took the loan. 1st April 2018. So for the entire year 18-19, 12 months, you would have paid interest, but that interest was not allowed to you because that year the construction was going on. No house property, no annual value. So this interest was not allowed in 18-19. Then in the next previous year also, 19-20 also, the construction was going on. And finally the construction got completed in previous year 2021, they are saying. Please check. The construction was completed on 30th November 20. So in the previous year 2021, now you have house property. Now you will calculate annual value also from 2021 onwards, and whatever interest starting from this year will be allowed as a deduction in the same year itself. But what about the interest for these 12 months and these 12 months, 18-19 and 19-20? Can I say interest till 31st March 2020, starting from date of borrowing, which was 1st April 2018, starting from that date till 31st March 2020. The 31st March immediately preceding to date of completion of construction. Date of completion of construction was 30th November 20. Immediately prior to that, 31st March 2020. So from the date of borrowing, 1st April 2018 till 31st March 2020, whatever interest was there, that was not allowed as a deduction because in that period there was no house property. So this interest starting from 18-19 to 19-20, this is my pre-construction interest. So how much interest? 20 lakhs into 9% for the first year and 20 lakhs into 9% for the second year. 1 lakh 80, 1 lakh 80. Total should be how much? 3 lakh 60 that they have only calculated and given to you. Check. So this way your examiner is becoming sweet. What you are supposed to tell your examiner? Thank you. You have yourself calculated pre-construction interest and given it to us. You did not even put us in the trouble to calculate this 3 lakh 60. You only calculated and gave it to us. Now apply some mind. Pre-construction interest 3 lakh 60. If they would not have given, you would have also calculated the same amount. Now this 3 lakh 60 is the total pre-construction interest for this pre-construction period, will be allowed in 5 equal annual installment. Can I say 1/5 of this will be 3 lakh 60 divided by 5 will be 72,000 everyone? Yes or no? 72,000 will be allowed for the first time in the year in which the construction was completed. So what was the year in which the construction was completed? 2021. So 72,000 you have already claimed in 2021. Then 21-22. Then 22-23. Then 23-24. And can I say 72,000 last time you will be claiming in our previous year? And have they told you that you have repaid that loan? No. So that entire loan of rupees 20 lakh is still outstanding. So on that 20 lakhs, will I pay 9% interest for this year also, 24-25? So what will be the normal interest becoming due on this 20 lakh loan for my previous year? It will be 1 lakh 80,000 only. Hello, sir. Entire 20 lakh remains outstanding for my previous year also, no? 24-25. So 24-25, 20 lakh rupees is outstanding. On that 9% interest for the entire 24-25 is the normal interest for this year. 1 lakh 80 plus 72,000, 1/5 amount of pre-construction interest coming for the last time in my previous year, 5th installment. So how much is the total interest? 2,52,000. Hello, sir. Got it? Sure. So now in my previous year, 24-25, the interest which is due on the loan outstanding in this year is how much? 20 lakhs into 9%, which is 1 lakh 80,000 plus the 1/5 of pre-construction interest, which was how much? 72, and this is the 5th and final installment, 72,000 coming in my previous year. So total interest which is for my previous year is not 180 now, it is 2,52,000. Now tell me, was the loan taken on or after 1st April 99? Yes, loan was taken on 1st April 18. Hello. For the purpose of construction, and construction got completed within 5 years from the end of the year in which the loan was taken. Yes or no? So loan is a special loan. On that loan, whatever interest is there will be allowed subject to maximum 2 lakhs. So what interest is there? 2,52,000, and in this year, 2,52,000 interest is for this year, and this year this interest is for the loan which you have taken for this Purna's SOP, no? So this SOP, there was a housing loan. On that housing loan, this is the interest. This interest will be allowed subject to maximum 2 lakh rupees. This or this, whichever is lower. Tell me how much will be the deduction? 2 lakh. And what will be the final income, you know? Nil, 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 nil. 2 lakh. Loss of 2 lakhs. Because Purna's one SOP, Purna will claim it as exempt only. And since Purna is not following 115 BAC, she is shifting out. She is going to get this deduction of 2 lakhs. So what will be the final income? Come on, they are telling you. Compute Purna's income from house property. How will you compute? You will write name of the associate Purna, status individual, then status individual ROR, then PAN dash, previous year 24-25, assessment year 25-26, computation of income under the head house property, particulars, And in the column, you will write Purna's SOP at Bangalore. SOP at Bangalore. For this SOP, you are calculating, no? So in the heading, you will write SOP at Bangalore. If she would have had one more property, then the calculation would have been same. So one more column we would have added. What other property at some other place. So this calculation is for SOP at Bangalore. This calculation might be for Chennai property. This calculation might be for Bombay property. Yes or no? Because everywhere the format remains same. We just have to do the same calculation for different property. So why to make multiple formats? In one format, I can cover multiple properties, no? So one format will be made for this one property. Yes or no? What I will write? SOP at Bangalore. I will directly start from GAV. I will not write municipal value, fair rent, etc. I will directly start from GAV. And in the bracket, I will write note. What? As per section 23(2), the annual value of any two SOPs at the option of the assessee is exempt. Hence, SOP of Purna's SOP, the annual value of Purna's SOP at Bangalore is taken as nil. Hence, the municipal value, fair rent and municipal taxes of the Purna's property SOP have all been ignored. And we have taken GAV as nil. That you are supposed to take as a note. Municipal tax not allowed as a deduction because for SOP, municipal tax deduction is not available. So NAV will become nil. 24A, nil. Interest on housing loan deduction, we have calculated. Write down this 2 lakh rupees negative. What final amount will get? Negative 2 lakh. Is it a taxable income or a loss from house property? Loss from house property. So this is the loss of the house property. If I have other property having positive income, from that, this loss will be adjusted. But there is no positive income because there is no other positive property. Yes or no? So this is the only property under this head giving me a loss. So this loss will now become the loss of my head. Loss under the head house property will be 2 lakhs. Hello sir. Difficult? I explained, you understood? I am explaining the same things which I have already taught you. But the correct things should strike you at correct time. Hello. 8 months pre-construction interest. How come 8 months pre-construction interest is coming, Kani? 1st April 2018 you have taken the loan, no? So pre-construction interest will start from date of borrowing, 1st April 2018. So how much interest you have paid in 18-19? 12 months. How much interest you have paid in 19-20? Tell me. Don't look at the date of completion of construction. Whatever interest you have paid in that year, April to November, becoming due in that year, will be allowed in that year. You are supposed to take pre-construction interest till 31st March. Hello? What mistake you are doing, you know? You are taking the pre-construction period, you are stretching the pre-construction period till date of completion of construction. Why are you taking there? I told you to end your pre-construction period on 31st March. Immediately prior to date of construction of completion of construction. Because whatever interest which will become due in the year of construction, no, April to November and after November, that entire interest become due in that year will be allowed in that year. And if you are taking that interest as a part of, taking the interest of 8 months as a part of pre-construction interest, you are trying to claim that interest for the second time as a part of pre-construction interest. Hello? Understanding? Sure? Now please don't commit this mistake for the second time, okay? Come on. Now let's go to next question. Let's see what type of question it is. Okay, now it is partly let out, partly self-occupied. More than 2 SOPs. This is very interesting question. Mark this question important. Start solving. First of all, tell me, these three SOPs are there. Please look at me here. Three SOPs are there. Annual value of all the three SOPs exempt or any two. Then the third will become DLOP. Now you are supposed to tell that which two SOPs you will claim exempt and which third property you will tell DLOP. So now you have three options. 1 and 2 SOP, then third will be DLOP. If you say 1 and 3 as SOP, then 2 will become DLOP. And if you say 2 and 3 SOP, then 1 will become DLOP. Now you'll have to make three calculations. You have three houses. Okay. First I'll read the question. Okay. Ganesh has three houses, all of which are self-occupied. Particulars of all the houses are given. Municipal value, fair rent, standard rent, when the completion or purchase of the house was completed. Yes or no? Then municipal taxes of the houses are given. Interest or money borrowed for repair of property. That means for house 2, you have taken a repairs loan. On that, interest is given 55,000. And for house 3, you took a purchase loan. On that, the interest is 1,75,000. So house 3 loan is a purchase loan. On that, interest is 75,000. Everyone understanding? And house 2 loan is repairs loan. On that, the interest is 55. There is no housing loan for property 1. Getting my point, everyone? Sure? Now, pay attention. Wait, see. Now, compute Ganesh income of house property and suggest which house should be opted by Ganesh to assess as self-occupied so that his tax liability is minimum. Read the question properly. Minimum tax liability should come. So pay attention here. Three houses are there. First, let's make assumption. We are making a first assumption. Assumption 1. That let's assume all house properties are what? DLOP. So if house property 1 is DLOP, what will be the income? If house property 2 is DLOP, what will be the income? And house property 3 is DLOP, what will be the income? First, let's make this assumption. Okay. Now, can I say H3, H2 and H1? Okay. Municipal value, fair rent, higher amount compared with standard rent. This is higher, this is lower. You will get expected rent. And friends, there will be no actual rent over here because all the properties are SOP, but we are in this assumption treating all of them as what? DLOP. So deeming the property will not allow you to earn the rent. There will be no actual rent. Getting my point? So whatever expected rent will come, no, that will directly become what? GAV. And there will be no unrealized rent also. Getting my point? So GAV, directly expected rent will be taken as GAV. Now pay attention over here. Please look at this thing. Don't worry. I will pass on the notes also to you. But pay attention. Now from this GAV, what you will do? You will reduce municipal taxes. You will get NAV. And from that you will take two deductions. 24 clause A, standard deduction, and 24 clause B, interest on housing loan. Yes or no? This is 30% standard deduction and this is interest on housing loan. Sure? Now final incomes you will get for all the properties. Assuming that all the properties are DLOP. Now what we are doing, please check. 3 lakh, 375, 350. 3 lakh, 375 and 350. Okay? Come on, tell me 3 lakh or 3 lakh 75, whichever is higher. 3 lakh 75. 3 lakh 75 or 3 lakh 50. Hello, whichever is lower. 3 lakh 50. Is there any actual rent? No, actual rent not applicable here. Okay. So whatever expected rent will be there, that entire amount will become your GAV. Hello. Can you see municipal tax for this property is paid? How much is the municipal tax? That is 12% of municipal value. So 12% of 3 lakh will give you 36,000 everyone. So your NAV here will be 3,50,000 minus 36,000. 3,14,000 will be your NAV. And can I take 30% of that? That is 94,200. Hello? And there is no loan which is taken for house 1. So there is no interest on housing loan. Yes or no? So reduce that. You will directly get how much? 2,19,800. This is the income of house property 1. If you treat this house property as what? DLOP. Getting my point? Now let's assume that if we treat house property 2 as DLOP, what will be its final income? Hello sir. Sure, no? Come. House property 2. 3,60,000, 2,75,000, 3,70,000. 360, 275, 370. 360, 275 and 370. Please check the amounts. Amounts are correct, no? 360, 275 and 370. Yes, correct. Now, whichever is higher, 3,60,000. 3,60,000 or 370, whichever is lower, 3,60,000. Everyone, dash. Can I say here my GAV will be 3,60,000? And can I say now 8% of 3,60,000 into 8% will be 28,000. That is municipal tax. Municipal tax is allowed if the property is treated as what? DLOP, no? Hello. So minus the amount from 3,60,000, you will get 3,31,200. And for this, you are supposed to take 30%. That is 99,360. Everyone, 99,360. Yes or no? Now, is there any loan taken for this house? Yes, that loan was repairs loan. And on that interest is 55,000. Can you see? That entire 55,000 you cannot claim. You can claim maximum 30,000. So, if you do it, no, you are gone. You do it only if you treat the property as what? SOP. Are you treating this property SOP? Or it is DLOP? So for DLOP, whatever loan is taken, on that whatever interest is there, that entire interest is allowed, no? Ayyo. Understanding? Don't take 30. Take the entire interest, because the property, you are treating the property as DLOP. As if the property is DLOP, entire interest will be allowed. So 55,000. So 3,31,200 into 30% will give you 99,360 minus what? 55,000. You will get 176,840. Everyone getting 176,840. Tell me yes or no. Sure. Now come to this part. House 3. House 3. This is 330, 380, 375. 330, 380 and 375. Come on, whichever is higher, 380. 380 or 375, whichever is lower, 375. There is any actual rent? No. So can I say 375 will become my GAV? Yes. Now, please check. 6%. 6% of 3,30,000. So 3,30,000 into 6% will be 19,800. Now 3,75,000 minus 19,800 will give you 3,55,200. Take 30% of that. You will get 1,06,560. And there is one loan which was taken for house property 3, and that was purchase loan. And on that interest is 1,75,000. Allowed subject to maximum 2 lakh or 30,000. This is DLOP. So full interest without any limit will be allowed. 1,75,000. Now if you calculate, you will get 73,640. This is first calculations which you have done. Now the second calculation you are supposed to do, assumption. Assumption number 2. That assume that all house properties are what? SOPs. And wait, now here also you are supposed to make two assumptions. If all house properties are SOP, you are following 115 BSE or you are not following 115 BSE. If you are following 115 BSE, hello? If you are following 115 BSE, then for these house properties, the income will be nil. No interest deduction, hello? Getting my point? So if assumption 2 is that all the house properties are SOP, in that I am assuming that, for example, 115 BSE was followed, then there is no interest deduction, yes or no? No interest deduction for any of the house properties. If the house property is treated as SOP, from that interest deduction will not be allowed. Why? Because 115 BSE you are following, yes or no? So everything will be nil. Even interest, whatever interest is there, even that will not be allowed. Interest will also be nil. So final income from all the properties will be nil. Hello. So house 1, the final income will be nil. House 2, final income will be nil. House 3, final income will be nil. This is when you follow 115 BSE. Now what if all the properties you are treating as SOP, what will be the income of first property if it is SOP? And you are not following 115 BSE, yes or no? So now what you will do? Second assumption, you will take 115 BSE. No, you will not take 115 BSE. That means now interest on housing loan deduction you are supposed to get. Hello. So from H1, which is 0, everything 0. Yes or no? H1, H2, H3, all the incomes will be 0. But finally, interest on housing loan deduction you can claim, no? So for first property, there was no loan, so no interest. So here, the final income will be nil. Second property, there was repairs loan, and on that 55,000 interest is there, but that will not be allowed fully now. Because now H2 you are treating as what? SOP. H2 you are treating as SOP. So SOP interest is how much? 55,000. But that interest is on housing loan which was repairs housing loan, no? So 55,000 will be allowed subject to maximum 30. So here 30,000 loss will come. 30,000 interest will be allowed. 30,000 loss will come. Yes or no? Now if you treat house property 3. If you treat house property 3 as what? SOP. So from there also everything is nil. Interest will be allowed 1,75,000 subject to a maximum limit of 2 lakhs because that was a purchase loan taken in 2017. On or after 1st April 19. Purchase loan taken. If nothing is mentioned, purchase it done within 5 years. So special loan is there. On that interest is 1,75,000 will be allowed subject to maximum 2 lakhs. So here entire 1,75,000 will be allowed as a deduction. So your loss from this property will be 1,75,000. Getting my point? So this is house property income. If each house property was separately treated as what? If this first property is treated as SOP, its value is nil. If second property is treated as SOP, its final loss will be 30. If third property is treated as SOP, its final loss will be 1,75,000. Everyone getting my point? Now, if the assessee follows 115 BSE, what did I say? If the assessee follows 115 BSE. So what we are supposed to do? We are supposed to take this table and we are supposed to take this table. Both the tables we are supposed to combine. Yes or no? Now, in this, we have 3 options. First option, second option, and third option. What is my first option? This is my H1, this is my H2, and this is my H3. H1, H2, H3. In the first option, what I will do, I will consider house 1 and house 2 as what? SOP. Then 3 I will have to consider as what? DLOP. Yes or no, sir? I'll shift it a little bit this side. Why it's not working? Wait. I will write down little bit this side. If I follow 115 BSE, same thing I'm writing, but shifting this side so that I get the final total column also. Yes or no? So my first option will be there. My second option will also be there. And my third option will also be there. This is my H1. This is my H2. And this is my H3. And I will have one more column of total. If I treat house 1 as SOP, house 2 also as SOP, and house 3 I will have to treat as DLOP. Now tell me, if I follow 115 BSE and treat house 1 as SOP, what will be my income? Nil. I treat my house property 2 as SOP, what will be my income? Nil. Because under 115 BSE, I will not get any interest deduction. All the properties, there will be nil. Yes or no? So here, can I write SOP income will be nil? SOP income will be nil. Now, house 3 I am treating as what? DLOP. So, I will have to go to the first column. Sorry, first table. Can I say house 3, if DLOP, then its income will be 73,640. So, I will go and write 73,640 here. Now, can you total nil plus 73,640? Your total will be 73,640. Now, if you choose this option, no, treat house property 1 and 2 as what? SOP and 3 as DLOP, your final taxable income under the head house property will be 73,640. Now, what second option you have? Come on, tell me. Second option you have, treat this as SOP, treat this as SOP, but this will become DLOP then. So, if this is SOP, its value will be nil. This is SOP, then this value will be nil. Because under 115 BSE, SOP, no interest will be allowed. Final income will be nil only. Yes or no? Now, house 2 is DLOP. Can you see house 2 DLOP? House 2, what will be the income? If it is DLOP, 176,840. So, can I say 176,840 will be the income? Now, nil plus 176,840 plus nil, your income will be 176,840. Are you all getting me? Now, tell me. Compared to this, first option is better, no? If I treat house 2, house 1 and house 3 as what? SOP, then I will have to show house 2 as DLOP. In that case, my taxable income will be 176,840 and I will have to pay more tax. Which option is better? Option 1 is better or option 2 is better? Anytime option 1 is better, I will not take option number 2. Hello, sir. Now come to the third option. What third option I am having? I will now treat this property as SOP and this also as SOP, which will give me nil income only. Yes or no? Then I will have to take this property as DLOP. Now check. If house 1 is taken as DLOP, what is the income? 2,19,800. 2,19,800. Then the final income will be 2,19,800. This is the worst option which I can take. Because I am going to pay tax on 2,19,800. Option 2 was better than this. Hello? But can I say option 1 is best of all? So what will be my suggestion to my client? That we will show house 1 and house 2 as what? SOP, and we will show house property 3 as DLOP. And in that case, our taxable income from house property will be only 73,640. Yes or no? So this is my conclusion. Conclusion is what? Come on, tell me. H1 and H2 will be treated as SOP H3 will be treated as DLOP, and in that case my income from house property taxable will be 73,640, and this is my conclusion if I follow 115 BSc. But what if I don't follow 115 BSc? Then I will use this table and now this table. Hello? Now my SOP incomes will not be nil. Because if I follow 115 BSc, then it is nil. But if I shift out of 115 BSc, then I will get interest deduction. Then it will be nil, negative 30 and negative 1,75,000. Hello? So the same table which I made with pink color, now I will be making with green color. Assuming that the assessee is not following 115 BSc, yes or no? So now what I will do? Come on, tell me. Now I am assuming that assessee is not following 115 BSc, meaning that now he again has three options. Option 1, option 2 and option 3. H1, H2, H3 and total column. Come on, option 1. SOP, DLOP. Hello. Now tell me, SOP. Can I say first is SOP, then the income is nil? Second is SOP, then the income is negative 30. And both taken together, the interest does not exceed 30 also. Interest for first is nil, interest for second is 30. Both taken together, interest does not exceed 30. Hello. So can I say here I will write nil and here I will write negative 30, and house 3 is DLOP, first table. How much is that? 73,640. I will write 73,640. Now how much tax I will pay? Here it will be 43,640. I will have to pay tax on 43,640. This will be my taxable income if I treat house 1 and house 2 as what? SOP and 3 as DLOP. Now what is the second option with me? Come on, tell me. This I will treat as SOP. This also I will treat as SOP. Then I will have to treat this as DLOP. Sir, understanding, getting inside your mind or going above your mind, above your head, getting inside your mind, no? Come on. 1 and 3. Can I say 1 and 3 now? Both taken together, interest is not going more than 2 lakhs. Getting my point? So the loss is also not going more than 2 lakhs. Yes or no? So will I write nil here? Yes. Will I write 1,75,000 here? Yes. So what will be the DLOP income? House property to DLOP income is 176,840. Come on, 176,840. Now it will give me 1,840 taxable. Can I say this is more better than option 1? In option 1, I was supposed to pay tax on 43,640. In this option, my only taxable income will be 1,840. Now let's see option 3. What option 3 says? This will be SOP. This will be SOP. So I will have to treat this as DLOP. If this is SOP, negative 30. This is SOP, negative 175. Both taken together cannot be more than 2 lakhs. So I will have to restrict the loss to the extent of negative 2 lakhs. Yes or no? Now come first property, 2,19,800. So 2,19,800 minus 2 lakh will give you 19,800. See, this is better than the first option, but still not better than the second option. Getting my point? So what conclusion? Come on, tell me. Option 2 I will choose. Here conclusion will be H1 and H3 I will show as SOP and H2 I will show as DLOP. Yes or no? In that case, my income from house property taxable for me will be 1840. Hello. Now they are telling you from the point of view of taxation, which is the best thing which you can do. See, if you follow 115 BSE, then this is the best option. But still you are supposed to pay tax on 73,640. But if you don't follow 115 BSE, so this is the best option and you are supposed to pay less tax because the taxable income is 1840. Now what will be your final conclusion? What will you tell your client? Will you tell him to follow 115 BSE? If he follows 115 BSE, no, so he will have to pay, he will have to show this amount as taxable income. This option he will have to choose lowest amount under this option, and that also 73,640 he will have to pay tax. But if you will give him the option, if you will give him the advice that don't follow 115 BSE, shift out, and in that we will have this best option, and under this option you are supposed to pay tax on 1840. So what will be your final suggestion to your client? Don't follow 115 BSE. Show house property 1 and house property 3 as what? SOP, and house property 4, sorry, not house property 4, house property 2 as what? DLOP, so that your income from house property taxable for you is only 1840. This will be ultimate final conclusion which you will give. How was this question? Come on, tell me. Nice, no? 3 times calculations. What if 4 properties are given? So now all the 4 properties DLOP, all the 4 properties SOP, 115 BSE, no 115 BSE. Then now there will not be 3 options. Now there will be 4 options. First option, house 1, house 2, SOP. Then 3 and 4 will become DLOP. Likewise, you will have to make the combinations. Getting my point? But don't worry, at the most they will give you 3 properties only. And they are not going to ask you under both the schemes, default 115 BSE as well as no 115 BSE. They will ask you any one. And such kind of question will come for at least 6 to 8 marks. Getting my point? Sure. Let's move ahead. See, final answer. Final answer 1840. Got it? Okay. Now let's come to the next question. Question 7. Illustration 7. Start. This is Raj Lakshmi only. Owns a house property at Adyar and Chennai. So you are having a house property in Adyar? Okay. The municipal value is 5 lakh rupees. Fair rent is 4 lakh 20 and standard rent is 480. So first of all, let's calculate expected rent. Okay. Very easy to calculate. Tell me. Expected rent here will be 5 lakh or 420? 5 lakh. 5 lakh or 480? 480. Expected rent will be 4,80,000. Any problem till here? No. What is actual rent of the property? They are saying that the property was let out for 50,000 per month up to December 24. And thereafter tenant vacated the property and Srimati Raj Lakshmi used the house for self-occupation. Meaning that April to December the property is let out, and thereafter from January till March the assessee is self-occupying the property. Tell me, is there any vacancy? 9 months let out, 3 months self-occupied. Done. Actual rent will be for 9 months only. So 50,000 into 9, actual rent will be 4,50,000. Yes or no? Now, if there is no vacancy, what do we do? Actual rent or expected rent, whichever is higher. 100. Wait. Actual rent or expected rent, whichever is higher. That we take as GAV. So our GAV here will be 4,80,000 only. I should have reduced unrealized rent from actual rent, but we are not going to do that. We are reducing unrealized rent from GAV. So is there any unrealized rent given in the question? Yes. 2 months rent could not be recovered. November and December. 2 months rent could not be recovered. Meaning 1 lakh rupees of rent is unrealized rent. So out of my GAV, will I reduce 1 lakh rupees? Yes, sir. So how much will be my final GAV taxable? 3,80,000, sir. Okay, sir. Now tell me one thing. If 3,80,000 is my final GAV, is there any municipal tax? Yes, sir. The municipal tax is 12%. So 12% of 5 lakhs will be 60,000. Sir, 60,000 municipal tax I will reduce from here. So my NAV will be 3,20,000, sir. Everyone got it? Now 30% of 3,20,000 will be how much? Section 24 clause B, standard deduction, 24A, standard deduction will be 96,000. And sir, there is one loan which I have taken for this house. Interest on that loan is 25,000. But this loan was taken for repairs, sir. So what? It is a housing loan only, no? Housing loan, whatever interest you have paid, that entire interest will be allowed because the property is what? Let out. LOP. Hello, sir. So what you will do? 24 clause B. How much deduction you will take, sir? 25,000. Do you have calculators, everyone? Please use the calculators. Depreciate the calculators. Come on fast. On your calculator, 320 minus 96 minus 25, you will get 1,99,000. Kani, got the answer? Where did you commit the mistake? You know? Will you repeat that mistake? Write down wherever you are committing the mistakes, no, while solving the questions. Write down then and there only that in this question, at this place, I committed the mistake. So when you next time see that question, no, you'll come to directly your mistake. It will be in front of you. Rest everything is okay, but here I am committing mistake. So you will be careful from now onwards. Getting my point? Sure, everyone? Now see, now come to question number 9. This is a question which says that a property is partly let out and partly self-occupied. Yesterday I told you that whenever there is a property which is partly let out and partly self-occupied based on area, what we are supposed to do, the area which is let out, we will consider that particular part as a separate property. We will calculate the annual value as if that part is let out property only, and we will charge tax on that. Okay. What about that area which is self-occupied? We will consider that area, that part also a separate property that will be treated as SOP, and the annual value can be claimed as exempt, provided this is the only SOP you are having, or along with this one more SOP you are having. But if you already have 2 SOPs for which you are claiming exemption, then this SOP portion will be treated as your DLOP. Done? So to do that, what we are supposed to do, that whatever amounts which are given for this property, we are supposed to bifurcate those amounts. We are supposed to divide those amounts into your let out portion and self-occupied portion. And this division will happen on the basis of a ratio. And that ratio is ratio of area. How much area is occupied by let out portion? How much area is occupied by self-occupied portion? Based on that ratio, these amounts, municipal value, fair rent, standard rent, municipal tax will be divided into let out portion and self-occupied portion. Yes or no? Then interest will also be divided. Interest on housing loan will also be divided on the basis of same proportion, same rate. Okay. Then whatever interest which relates to let out portion will be allowed fully, and whatever interest which relates to self-occupied portion will be allowed from self-occupied portion, subject to maximum 30 or 2 lakh as the case may be. Done. So remember these things in your mind, and we are going to solve this question now. Okay. Prem owns a house in Madras. During the previous year 2024-25, two-third portion of the house was self-occupied and one-third portion was let out for residential purpose. Wait. Don't fall a trap of this word, residential purpose. Before that they are saying one-third portion was let out. And the person to whom you have given it, he is using it for residential purpose. Understanding? So sometimes it might happen that, oh my God, sir, this one-third was also a residential part, no? No. They're clearly mentioning one-third portion was let out. That's it. Now the person to whom you have given it, he is using it in residential purpose. Getting my point? Now, so this one-third is LOP, okay? The rent of rupees, at a rent of rupees 8,000 per month. So what is the rent of that let out portion? 8,000 per month, okay? Next one, municipal value of the house property is 3 lakh. Fair rent is 2 lakh 70 and standard rent is 3 lakh 30,000 per annum. Okay, very good. So can I say this is the municipal value of the property? Of the property means for the entire property. So we'll have to divide all these figures into let out portion and self-occupied portion in the ratio of 2/3 and 1/3. Okay. Next one. He paid municipal taxes at 10% of the municipal value during the year. So whatever municipal value was there, for that 10% municipal taxes are, on that 10% municipal taxes are levied. So that municipal tax will be for the entire house. Now you are supposed to divide that municipal tax also into 2/3 and 1/3. The 2/3 which relates to SOP portion will not be allowed, but 1/3 which relates to LOP portion will be allowed while calculating income from LOP portion. Yes or no? Next one, a loan of rupees 25 lakhs was taken by him during the year 2020 for acquiring the property. They are not saying that you are taking this loan for 2/3 portion. You are taking this loan for 1/3 portion. No, this is acquired. This is taken to acquire the property. That means for entire property the loan was taken. So definitely whatever interest which will come on this loan, that interest will also be for entire property. That we are supposed to divide into two parts. 2/3 SOP, 1/3 LOP. Yes or no? Next one. Interest on loan paid during the previous year 24-25 was 1,20,000. So you are not supposed to calculate that interest also. That interest is also given to you. Okay. So for this year, how much is the interest on this loan? 1,20,000. Out of that, 2/3 for SOP portion and 1/3 for LOP portion. Okay. Compute Prem's income from house property for the assessment year 25-26, assuming that he has exercised the option to shift out of the default tax regime, meaning he is not following 115 BSE. And if he is not following 115 BSE, can he claim interest on housing loan deduction from his SOP portion? If he is not following 115 BSE, default tax regime, he is coming out, shifting out, can he claim SOP exemption, SOP interest? The answer is yes. Yesterday only we have discussed, macha. If he follows 115 BSE, then he is not allowed to claim interest from SOP. Do you remember this? Please note this thing. If assessee does not follow 115 BSE, meaning he is coming out of 115 BSE, then interest on housing loan for SOP will also not be allowed. Sorry, will be allowed, will be allowed. If it does not follow, it will be allowed. It will be allowed. Yes or no? It will be allowed. And if it does not follow 115 BSE, then it will be allowed. But what if he follows 115 BSE? Then in that case, interest on housing loan for SOP will not be allowed. Yes or no? What about LOP and DLOP? For LOP, DLOP, he can claim under both. Getting my point? Here there will be no problem. But SOP interest will not be allowed if he is following what? 115 BSE. So now tell me in the question what they are saying. They are saying that he has exercised the option of shifting out of 115 BSE. Shifting out of default tax regime means he is not following 115 BSE. Will he be able to claim interest on housing loan for SOP? Will he be able to claim it? Yes. If not following, then he can claim. If following 115 BSE, then he cannot claim interest for SOP. But for DLOP, LOP, it will remain same. Under 115 BSE also, and shifting out of 115 BSE also, interest on housing loan will be allowed under both the regimes. Yes or no? Sure? If you are forgetting these things right now, yesterday only we have done, how will you be able to remember all these things till your examination? I am wondering. By heart this thing, these things are very important. And you will be put in trouble in the exams on these matters only. Okay. Now come on. See, you are supposed to compute what? Compute Prem's income from house property. That's it. So what we are going to do, we are supposed to make a small format. Okay. Here what we'll write? Computation of income from house property for Mr. Prem. I don't know whether he is individual or not. Is he individual? Yes. If nothing is mentioned, he is ROR also. Computation of taxable income from house property for Mr. Prem, who is individual, ROR, for the previous year 24-25, that is assessment year 25-26. This will be your heading. Okay. Now what we are going to do, please pay attention over here. We will write 1/3 portion. And that 1/3 portion is what? LOP, everyone. And here we will write 2/3 portion. What is this 2/3 portion? This is SOP. And here we will write one more column, total. And here we will write particulars. Ready? I am ready with my format. Now what will you do? Municipal value, fair rent and everything write in the particulars column. Then we'll put the amounts in the amount column. That's it. Okay. Come on. Let's see. First one is municipal value. Then fair rent. Then whichever is higher compared with standard rent. Whichever is lower is what? expected rent. Expected rent will then be compared with actual rent. You will get GAV. Out of that you will reduce unrealized rent if any. Yes or no? And then you will get balance GAV. Now out of this you will take deduction for municipal taxes paid. Then what will you get? NAV. Okay. Now out of this NAV, what will you reduce? Come on, tell me. Out of this NAV, what will you reduce? Two deduction. 24 clause A. Standard deduction at the rate of 30% of NAV. Then you will reduce 24 clause B. Interest on housing loan. Done? I am ready with my format now. Now I have to find out these amounts from my question. And I will have to put these amounts in the solution. Tell me, what is the municipal value given in the question? Come on, tell me. Municipal value is 3 lakh and fair rent is 2 lakh 70. Standard rent is 330. Okay, no? 3 lakh is my municipal value. So can I say 2/3 out of this relates to SOP portion, which I will not write in SOP because I don't have to calculate the income of SOP portion. I will be claiming the exemption for this SOP portion. Yes or no? And how much will be 1/3? It will be 1 lakh. And that 1 lakh of the municipal value will be relating to LOP portion. Then what is the fair rent? 2,70,000. Here I will put a dash and this will be 90,000. Okay, no? Now whatever calculations I'll be doing, comparisons I'll be doing in the last column. Please check. Higher amount I will put a dash here, I will put a dash here, and here I will write down 1 lakh. Are you all understanding what is happening? Now what is the standard rent? Come on, tell me. 3,30,000. Put a dash here and put 1,10,000 over here. Tell me. Lower amount, dash here, whichever is lower, 1 lakh. Sure. What is the actual rent? 8,000 rupees per month into 12. Don't write in the total column. Directly write this amount in what? LOP column. Yes or no? 96,000. So finally you will get the GAV. Now tell me, was there any vacancy? No, na? So can we directly compare actual rent and expected rent? Compare whichever is higher. So GAV here it will be nil and here it will be 1 lakh. 96 or 1 lakh, whichever is higher. Okay, 1 lakh will be your GAV. Was there any unrealized rent? No, there was no unrealized rent. So put dash over here. What will be the final amount of GAV? Balance GAV. Come on, tell me. Dash, nil and 1 lakh. You can directly put a nil over here also. Here. Now, tell me, municipal taxes are 10% of municipal value. So what was your municipal value? 3 lakh. 10% of that will be 30,000. So I will in my total column write down 30,000 as municipal tax. Out of that 2/3 relates to SOP portion. Dash. Or I can say nil. 20,000 which relates to SOP portion will not be allowed. Because for SOP portion I am claiming exemption and any municipal tax relating to SOP portion will not be allowed as a deduction. Yes or no? Then the balance 10,000 which relates to LOP portion, 1/3 amount will be allowed as a deduction from LOP portion. Yes or no? So the NAV will here be nil and it will be 90,000 in LOP portion. 30% of 90,000. Come on, tell me how much? 27,000. And interest on housing loan given in the question itself 1,20,000. Out of that 2/3 relates to SOP portion. And if he is following what? 115 BAC, then there will be no deduction for interest. But question says that he is not following 115 BSE, hence we are going to take the interest deduction here under SOP. So out of 1,20,000, 2/3 of interest relates to SOP portion amounting to 80,000. Will that 80,000 be fully allowed? The answer is yes. Why? Because the loan was taken in 2020. Please check the question. Meaning 1st April 99, on or after 1st April 99. The loan was taken for acquisition of the property, means purchase or construction. And if nothing is mentioned, purchase happened immediately, no? That means within 5 years the purchase and construction is over. So this is special loan, no? On that whatever interest is there will be allowed to the extent of 2 lakhs. Hello? For SOP. So SOP interest is how much? Only 80,000. Will it be allowed subject to 2 lakh? Yes, fully allowed under 24B. Yes or no? So tell me here, can I take 80,000 fully? And the remaining 40,000, 1/3 amount from here. So I will be having a loss of 80,000 from SOP, and 90,000 minus 27,000 minus 40,000 will give me 23,000 positive income for LOP portion. So negative and positive, both the incomes will be added. Yes or no? That will give me negative 57,000. Still there is a loss. Entire 80,000 loss could not be adjusted because only the income was 23,000. Getting my point? So still 57,000 loss remains. If there is another house property giving me positive income, against that the loss could be adjusted, but there is no other house property income. So finally my house property head will show a loss. This head will, out of 5 heads, this head will show a loss of rupees 57,000. So can I say this is a loss under the head income from house property? Getting my point? This is your final answer. And please be careful in this. Why are you doing this? Because assessee is not following 115 BSE. But what if I would have written here 115 BSE tick? 115 BSE tick. Then here the entire 80 would have been ignored. No deduction for interest. Then the final income would have been nil. So 23,000 plus nil, I would have got 23,000 positive income, taxable income under the head house property. Yes or no? Easy or not? But for this interest now, what I will do? I will write here, for this interest, I am making one working note also, so that you understand that why this collaborative, why this collaborative. Done? Pay attention. Interest on housing loan was 1,20,000. Out of this, 2/3 is for SOP. And that amounts to 80,000. Will be allowed subject to maximum 2 lakhs, whichever is lower. So 80,000 deduction from SOP portion, which I have written over there. Okay. And out of this 1,20,000, 1/3 for let out portion, and that amounts to 40,000. And this 40,000 fully allowed, and that is why I have written 40,000 over here. Done? Easy, no? Sure? No, made easy. Say thank you. So now whatever questions you are having, no, on partly let out, partly self-occupied based on area, all the question can you solve in this format? It becomes very easy, no? Now go and check the solution in the ICAI study mat. Half of the people get afraid to see that solution itself. How the way in which it is presented over there. It is not difficult as it appears to be. It is very easy. Getting my point? So now will you solve another question? Shall we move on? Perfect. Very good. Come on. So this was your ninth question, no? Ninth question done. And after ninth question, 10th question we are doing later on. Then 11th question we are doing later on. This question also we will do. Come to test your knowledge part. Practice questions. And in that, come to question number 2. In that, come to question number 2. And mark this question important. Good question. This question number 2, it is given on your page number 3.175. 3.175. Question number 2. X owns a residential house in Mumbai. House is residential house. So type of house they are saying. Commercial, residential house. House is having two identical units. Two identical units means one unit having same area as that of second unit. Yes or no? Both the units are having same areas. First unit is self-occupied by Mr. X and another unit is rented for 8,000 per month. So unit 1 is SOP, unit 2 is LOP. And both the units are having equal areas. So entire house divided into two equal parts. Yes or no? So what I will do? When I'll make my format here, I will write unit 1. Unit 1 which is half of the entire property. Yes or no? And unit 2 that is also half of the entire property. Unit 1 is SOP, unit 2 is LOP. Okay. Next one. So now what they are saying? See, rented unit was vacant for 2 months. So there is 2 months vacancy in let out property. Okay, that we'll see. The particulars of the house are given: standard rent, municipal value, fair rent, municipal tax. See what they are saying, that this is the particulars of the house, meaning that for entire house these details are given. So I will have to divide these details into half. Yes or no? Half for SOP, half for LOP. Next one. What they are saying, municipal tax and everything is given. They are saying that light and water charges are given. This is an expense, will be ignored because 30% standard deduction is given to cover all your expenses. Yes or no? So this expense will not be allowed. Interest on borrowed capital will be allowed, but that also I'll have to divide into two parts, half. Then lease money which I have paid will not be allowed as a deduction. Insurance charges will not be allowed as a deduction. Repairs will not be allowed as a deduction. Yes or no? These are my expenses related to property. And any expense related to property I have to ignore, because for that I don't get any deduction under house property head. I get only two deductions: one, municipal tax, and two, interest on housing loan. That I have already considered. See, both of them. I have not ignored both of them. Okay. Next, compute the income from house property if he exercises the option to shift out. Meaning that 115 BAC followed or not followed? Not followed. Getting my point? So here I will write 115 BAC not followed. So will I get interest deduction? The answer is yes. Sure? Now let's start. What is the municipal value? Municipal value is 1,90,000 and 1,85,000 is fair rent. 1,90,000 I will write here, and 1,85,000 I will write here. 190 divided by 2 will give me 95,000. So dash here it will be 95,000. Getting it or not? 1,85,000 divided by 2 will give me 92,500. So here it will be dash, here it will be dash, here it will be 95,000. Sure? So now let's move on to standard rent. What is standard rent? 1,62,000. So I will write down 1,62,000 over here, and 1,62,000 divided by 2 will give me 81,000. Yes or no? 81,000. Are you all getting? Sure, sir. Pay attention now. Lower will be how much? 81,000. Then what is the actual rent? The property is given on a rent of rupees 8,000 per month. Let out portion is given on a rent of 8,000. But there was 2 months vacancy, no? So the let out period is only 10 months. So actual rent will be for 10 months only. Dash, dash, and it will be 80,000. Is my actual rent lower than expected rent? Yes. Reason could be vacancy. So let's add the vacancy rent in 80,000. So vacancy period rent 2 months into 8,000 will give me 16,000. 16,000 plus 80,000 both taken together will be 96,000. 96,000 is still more than 81, no? That means the reason for my actual rent to be lower than expected rent is what? Vacancy. So hence my actual rent is correct. I will take actual rent only as GAV. Hello? So here it will be dash, here it will be dash, here it will be 80,000. Was there any unrealized rent? The answer is no. There was no unrealized rent. Yes or no? Unrealized rent was not there in the question, no? Then balance GAV will be nil for. Final GAV will be nil for SOP portion, and it will be 80,000 for LOP portion. Now municipal taxes are how much? Come on, tell me. Municipal taxes are 5% of municipal value. Okay, no? So I will write down 5% over here. 5% of municipal value. So 1,90,000 into 5% will give me 9,500. Out of that, half relates to SOP, will not be allowed as a deduction from SOP portion. So divide by 2 will be 4,750. That will be allowed from which portion? LOP. Done? So NAV, final NAV will be nil. So 80,000 minus 4750 will give me 7520. Everyone getting this? 75,250. 75,250. Now I will do 30% of this. That will give me 22,575. And here it will be dash, dash, and this will be nil. Okay. Now what is the interest? Come on, tell me. 500 rupees per 1500 rupees per month, no? So can I say interest? For that I will do a working note, small working note over here. Interest on housing loan, and that amount is 1500 per month into 12 months. That is how much? 18,000. Out of that, half relates to SOP portion, and that amount is 9,000. Will be allowed subject to maximum how much? Tell me. Are they saying what type of interest it is? It is for purchase, it is for construction. Yes or no? Not saying anything. It is for repair when the loan was taken. So my limit could be 30 also here, and the limit can be 2 lakh also. Anyways, any limit I take, that 9,000 is lower than all the limits, no? So whichever is lower will give me 9,000. So this 9,000 I will take it as a deduction out of my SOP portion. And out of this, half relates to LOP portion, that amounts to 9,000, and this 9,000 will be fully allowed. Yes or no? 9,000 here also. So minus 9,000 will give me 43,675, and here it will be negative 9,000. What will be the total? It will be 34,675. This is my taxable income. under the head income from house property. Done? Very difficult question or easy? Okay, very good. Come on. Now, one more question. Question number 3. Okay, in the last question, if they would have told you that what if the assessee does not shift out of 115 BSE, he follows 115 BSE, then the final answer would have been 43,675 only. Yes or no? In SOP, there was no interest deduction. SOP final income would have been 0. So 0 plus 43,675, taxable income would have been 43,675. Yes or no? Okay, very good. Now come to question number 3 now. Start. Mr. Vikas owns a house property whose municipal value, fair rent and standard rent are 96, 126 and 1,08,000 per annum respectively. During the financial year 24-25, one-third of the portion of the house was let out for residential purpose at a monthly rent of 5,000. The remaining two-third portion was self-occupied by him. Now, municipal taxes are given. 11% of the municipal value was paid during the year. The construction of the house began in June 2017 and was completed on 31st May 2020. Vikas took a loan of rupees 1 lakh on 1st July 2017 for the construction of the building. He paid interest on loan 12% per annum and every month such interest was paid. See, this entire information is given to calculate your interest amount. So from this, you will be calculating your current year interest also and also the pre-construction interest. Okay, and pre-construction interest you will calculate 1/5 of that you are going to come and claim in our previous year also. How? We will discuss. Don't worry. Compute the income from house property of Mr. Vikas for the assessment year 2025-26 if he has exercised the option of shifting out of the default tax regime. Meaning that again here he is not following 115 BSE. That means from his SOP portion he is going to get interest on housing loan deduction. Yes? Now let's start. One-third portion is let out, no? Two-third portion was self-occupied, yes. Now the name of the assessee is Mr. Vikas. I will change and I will write down Vikas. Okay. Now tell me what is the municipal value. Municipal value 96, 126 and 108. 96, 126 and standard rent is 108. Okay, so 96,000 divided by 3 will give me 32,000. So here it will be 32,000. Okay, 1,26,000 divided by 3 will give me 42,000. So here it will be 42,000. Sure? So higher amount is, come on tell me, 42. Out of this 42, no, first this 42 will be compared with standard rent. 1,08,000 divided by 3 will give me 36,000 of standard rent. There should not be any problem till here. Till here your answer should be 36,000. Yes or no? Now tell me, actual rent is how much? 5,000 rupees per month. And if nothing mentioned about what? Vacancy and all, meaning that for the full year the property is let out. So let out period is 12 months. 12 months into 5,000 will give me 60,000. So that 60,000 I will write down here. So now you tell me GAV would be 60,000 only. Was there any unrealized rent, friends? No unrealized rent. Very good. So can I say my final balance GAV will be nil here and 60,000 here? Sure. Now how much is the municipal taxes paid? 11%, no? So I will change it to 11%. Municipal tax 11%. So 96,000 into 11% will give me 10,560. 10,560 divided by 3. This will give me Here 2/3 will not be allowed, but 1/3, 3520, which relates to LOP portion, will be allowed as a deduction. Now NAV will be how much? Here it will be nil, and 60,000 minus 3520 will give me 56,480. Everyone getting this? So till here no problem. Into 30% will be 16,944. 16,944. Here it will be nil, and here it will be dash. Sure. Now we will have a discussion about the interest. But for interest, I will have to make a working note. Right? Okay. Let's go to that working note. Come on, tell me. See, the date of borrowing was, in the question it is said 1st July 2017. So 1st July 2017. Can I say previous year 17-18 the loan was taken on 1st July 2017? Okay. The amount of the loan was 1 lakh and the rate of interest was 12%. The construction completed. When the construction was completed? 31st May 2020. So can I say DOCOC is 31st May 2020 and 31st March immediately prior to this. That is 31st March 2020, which comes in previous year 1920. Sure? So can I say previous year 17-18 I took the loan. So in this year I paid interest from July to March amounting to for 9 months. July to March will be 9 months. So for 9 months what will be my interest? 1 lakh into the rate of interest was 12% into 9 upon 12. So for these 9 months I have paid how much interest? Come on, tell me. 12% into 9 divided by 12 will give me 9,000 rupees. Yes or no? And in the year, in the previous year 18-19 also I would have paid the interest. In the previous year 18-19 I have paid for full 12 months, and that is 1 lakh into 12% full year means 12 by 12 means 1. So don't write that also, no. 1 lakh into 12%, and that will be paid for 1920 also, no. 1 lakh into 12%. So here the interest will be 12,000. Here also the interest will be 12,000. So total interest will be 12 plus 12, 24 plus 9 will give me 33,000 interest. Can I say this 33 is my pre-construction interest? And this will be allowed in 5 equal annual installments. So divided by 5. So this divided by 5 will give me 6,600. So this will be first time allowed in the year in which the construction was completed. And that was previous year 2021. Then 21-22 second time. 22-23 third time. 23-24 fourth time. And in my previous year this will be allowed for the last 5th time. Yes or no? And along with this, the normal interest for my previous year will also become due, no? So can I say in the previous year 24-25 the interest due on outstanding loan for my previous year is what? 1 lakh rupees was outstanding. On that 12% I will have to pay for this year. This is my normal interest for current year. And along with that I will add 1/5 of pre-construction interest. This is my 5th installment amounting to rupees 6,600. So what will be my total? It will be 18,600. Now this 18,600 is the total interest for previous year 24-25. Now out of this 2/3 is for SOP portion and out of this 1/3 is for LOP portion. So divide by 3 will give me 6,200. This will be fully allowed. Sure, no? And can I say this will be 12,400? Will be allowed to a limit of, to the extent of maximum 2 lakhs. Why 2 lakhs? Because the loan was taken on 1st July 17, meaning on or after 1st April 99. For the purpose of purchase or construction. The loan was taken for construction. And the construction also got completed within 5 years from the end of the financial year in which the loan was taken, no? So loan was taken in 17-18. After the end of 17-18, within 5 years, the construction got completed. So the loan is a special loan. On this special loan, the limit will not be, interest limit will not be 30. It will be 2 lakhs. But how much interest is there? 12,500. Will be allowed fully? No. This or this, whichever is lower. So here 12,500 will be, 12,400 will be allowed as a deduction. So from SOP, can I claim? Now this working note, no, this stuff I will shift here. Okay. Now 12,400 from here and 6,200 from here. Tell me negative 12,400 and 56, 480, 30% will be 16,944 minus 6,200 will give me 33,336 positive. And from this I'll reduce 12,400. I will get 20,936 positive. So this is my taxable income under the head income from house property. Final answer. Mark this question important, because this question contains calculation of your pre-construction interest also. The last two questions were very easy. Okay. But this question had a calculation of pre-construction interest. So when you will solve this question for the second time, you will get an idea of partly LOP, partly SOP based on area, and also the pre-construction interest concept you will be able to learn for the second time in this question. Yes or no? Now, all the questions for that partly let out, partly self-occupied are done. Okay, very good. Now, I will discuss few concepts with you, then again we'll come to the remaining questions. Right? Wait. Pay attention now. What we are going to do here now, that see, if there is a house property which is situated outside India. Can you have a house property which is situated outside India? Yes or no? You are the owner of this house property and you are not using the house property for your own business or profession. Meaning that all the three conditions to bring this house property under this head are getting satisfied. So will you bring this house property under house property head and charge the annual value of this house property under this head? Depends on your residential status as well as whether the income of this house property is received in India or not. So there can be two possibilities. The house property which is outside India, this house property can be a let out property also, meaning LOP, and this house property can be a self-occupied property, meaning a SOP. Yes or no? Now, if this property is let out and the rental income, meaning the actual rent of this property, yes or no? If that rental income is received in India, tell me, will it become Indian income? Even though the property is situated outside India, rental income accruing outside India, but it is received in India, it will become Indian income. If your status is ROR, RNOR or NR, no matter what, now this rental income has to be shown taxable here in India. So for that, this property will be brought under the head house property. You will have to calculate the annual value of the property, and in that annual value calculation, you are supposed to show this rent taxable. Hello, sir. Understanding? Now, what if the rental income is received outside India? So the rent which was accrued outside India, received also outside India, is it a foreign income? Yes or no? Part A or part B? Part B foreign income. If it is a part B foreign income, what do we do? Tick, cross, cross. So meaning that in all these cases, the rental income of the house property is taxable in India. In these two cases, we are supposed to ignore. If you are not receiving that rent in India and your status is what? RNOR or NR, forget about this case. But in these four cases, what you are supposed to do? That rental income you are supposed to tax in India, no? So in order to do this, what you are supposed to do? You are supposed to compute the annual value of such property in such a way as if it is situated in what? India. As if the property is situated in India, now calculate the annual value. And in the calculation of that annual value, you are supposed to charge this rent as what? Taxable. You will take the municipal value, fair rent, whichever is higher, compared with standard rent. You will get expected rent. Hello, lower will be expected rent. Then that expected rent will now be compared with this actual rent. And by comparing, you will get what? Annual value. Getting my point? Now from that annual value, will you get any deduction for the municipal taxes of this property which you have paid outside India? You are supposed to calculate the annual value in the same manner in which you are doing for those properties which are situated in India, right? No. So for this property also, the annual value will be calculated in the same manner. No change will happen. And if the annual value of this property, to calculate that annual value, you will take this rent in the calculation of the annual value, you will get the GAV, etc. From that GAV, will you be able to claim the deduction for municipal tax of this property which you have paid to a local authority which is outside India? If the property is situated outside India, so the local authority under whose jurisdiction this property is coming, that local authority will not be in India. That local authority will be outside India. So any municipal tax for this property which you have paid to a local authority which is situated outside India, will you be able to claim that municipal tax here from this income? The answer is yes. You have to calculate the income of the property assuming as if the property is situated in what? India. So if the income is getting charged assuming as if the property is situated in India, then why not the deduction for municipal tax can be given assuming as if the property is situated in India? Even it should be given assuming as if the property is situated in India. Yes or no? That was Madras High Court's judgment in the case of R. Venugopala Reddy R. And where the Madras High Court says that even that municipal tax which you have paid to a local authority situated outside India will be eligible, very well eligible for the claim of deduction. So accordingly, any municipal tax of such property which is paid to a local authority situated outside India shall also be allowed, and this is allowed as per Madras High Court judgment. We'll rely on this judgment to take the deduction. Getting my point? Now one small thing. Tell me, if the property is situated outside India, don't you think to calculate the annual value of this property, whatever figures will be given will all be given in foreign currency? Municipal value, fair rent, standard rent, if at all, if these figures are there, municipal taxes, all these figures will be given in foreign currency, no? So your final income for this property, which you have now calculated, will be given in what? That amount you will be getting in foreign currency figures, no? Because all the amounts which are required to calculate this income of this property, all the amounts are expressed in what? Foreign currency. So take those amounts, calculate the income by taking those amounts. So final income of the property is in what? Foreign currency. But now you'll have to convert that foreign currency income into INR. And for that you will have to apply exchange rate, foreign exchange rate, applicable as on the last day of the relevant previous year. So for this previous year, this income is getting calculated. So what is the exchange rate applicable as on the last day of this previous year? Apply that exchange rate and convert the amount into INR. Instead of converting all the amounts by using the same rate, first calculate the final income, and convert the amount at once only, no? Because all the amounts are to be converted by applying the same rate. So instead of converting each amount every now and then, first calculate the entire income in foreign currency. Once the final income you have calculated, then convert that income into INR by using the rate of exchange applicable as on the last day. Getting my point? So what we are going to do here, the final income calculated, income from such house property computed in what? Foreign currency will now be converted into what? INR. And this conversion will happen by using what? Use exchange rate, foreign exchange rate as on last day of what? Of the relevant previous year. Got it, sir? Where you will get this exchange rate from? It will be given in the question itself. Okay? Understood? What if the property is situated outside India and the rental income from that property is received outside India and your status is RNOR or NR? Will it be your Indian income or foreign income? Foreign income. And foreign incomes are not taxable for RNOR or NR in India. Part B foreign income, no? So the income is not only taxable for you. So as an RNOR or NR, will you take this property under the head house property and try to calculate its income? No need to do that. So in these two cases, ignore the property. Don't show the property under the head house property only. Hello, sir. Because the rental income of that property you are not receiving in India, you are still receiving outside India, and your status is what? RNOR or NR. Everyone? Understood? Sure? Next one. What if the property is SOP? If the property is SOP, no? So, the annual value of this property can be treated as exempt under section 23(2). It can be exempt also by treating the property as what? SOP. Hello. And it can also be taxable by treating the property as DLOP under section 23(4). But this will happen only in the case of ROR. If your status is ROR. Do you have this only SOP? Yes. So you can claim the exemption of the annual value of this property. Hello? Do you have one more SOP? Yes. So that SOP along with this SOP annual value you can claim as exempt. But what if you are already having another two SOPs for which you are claiming an exemption for annual value? So for this SOP, now the annual value will be calculated and that will be taxable as if this property is DLOP because you are already claiming two SOPs as what? Exempt. Hello, sir. Understood? Then in that case, it will be DLOP. But nowhere it is written under 23(2) that SOPs, any two SOPs in India, the annual value can be claimed as exempt. It was said under section 23(2), annual value of any two SOPs is exempt. Any two SOP, whether in India or outside India, can be claimed as exempt. Got it? Hello, sir. But this discussion will be applicable only if the assessee is what? ROR. What if the assessee is RNOR or NR? Then for such assessees, ignore this type of property. Whether you are RNOR, NR, you are yourself outside India and your property is also outside India. From that you are not earning any income in India, not receiving any income in India. You are using that property as your SOP, which is outside India. So we are going to bring that annual value of that property and charge that income to you in India. No, forget about it. But if you are ROR, then this needs to be done. Will you remember this? Entire discussion easy? Sure. Now we are going to solve two questions having this concept. Now come to your illustration number 2. First, Rajesh, a British national, meaning that he is a citizen of Britain, Great Britain. He is a resident, an ordinary resident in India, meaning that even though he is citizen of Britain, his status is what? ROR. How come he became ROR, sir, in India? Citizenship, domicile, nationality, designation has nothing to do with residential status. Your residential status purely depends on your stay in India. Meaning that this Rajesh would have satisfied any one of two basic conditions of 6(1) and he would have become resident. And two additional conditions of section 6(6). He has not satisfied any of the two additional conditions. Hence, he has become ROR. So this ROR owns a house in London, meaning that ROR is having house property outside India. Okay. Now, which he has let out at £10,000 per month. So this house property was SOP or LOP? LOP. Now, whatever we have written on this side, see, this part, this entire part will be applicable now. Okay, pay attention. So this was let out at £10,000 per month. The municipal taxes paid to the Municipal Corporation of London is £8,000. And my dear friends, this £8,000 is not per month, this is for the full year. Even though the corporation is situated outside India, any municipal taxes paid to the corporation, local authority situated outside India will be allowed as a deduction as per the Madras High Court judgment. So if the income of this property is charged to tax in India, then definitely the municipal tax of this property can also be claimed as a deduction in India. Sure? Now tell me, for this ROR, if the property is situated outside India and this property is let out, so the rental income is accruing outside India. And if nothing is mentioned, definitely this rental income would have been received also outside India. They are not saying that the rental income is received in India, meaning that the entire 10,000 pounds of rent per month for all the months amounting to 1,20,000 pounds would have been received outside India only. So accrued outside India, received outside India, what type of income it is? It is a foreign income. But don't you think that the foreign income, part B or part A, any foreign income is taxable if your status is ROR? So since your status is ROR in India, this foreign income will also be taxed in India. Now this foreign income, this rental income will be taxable for you in India. So where you will classify this income? Under the head house property. Now under the head house property, this rental income will be used to calculate the annual value of this property. But for that, municipal value, fair rent, etc., everything should be given, which is not given for this property, meaning that will not be in a position to calculate the expected rent. So in that scenario, whatever actual rent will be there, in the absence of expected rent, we can say that this entire actual rent only is the rent earning capacity, meaning that this is only GAV. Hello, sir. So directly we will take GAV, and the GAV, what amount we will take? This actual rent only we will take as GAV. Because if you want us to take expected rent also to compare with actual rent, give us the details of municipal value and all. You have not given those details. So what I can do? I will say that the property's rent earning capacity is this rent only, which I am earning. GAV is this rent only, which I am earning. Hello. So I will directly start from GAV. Actual rent I will take as GAV, 1,20,000. And there is no unrealized rent. Can I say my final GAV will be 1,20,000 pounds? Out of that, municipal taxes for this year are paid in this year, even though paid to a local authority outside India. As per Madras High Court judgment, it will be allowed to me. Hello? So 8,000 I will take. So I will get net annual value of 1,12,000 pounds. And they are telling you to calculate what? Net annual value only. So net annual value we have calculated, that is 1,12,000 pounds, but we have to convert that NAV into what? INR. By applying the exchange rate that is given in the question. Please check. 1 pound is equal to rupees 95. So how much should be 1,12,000 pounds? 1,12,000 into 95 will give you 1,06,40,000. This is the NAV of the property. Now see, there can be a catch in this question. What if they are telling you to calculate taxable income from this house property? Instead of NAV, if they would have asked you to calculate the taxable income. So don't you think from this NAV you would have taken two deductions? 24 clause A and 24 clause B. 24 clause B is for interest on housing loan, not available. No housing loan taken. But can I say 24 clause A, standard deduction would have been allowed? So out of 1,12,000 pounds, I would have taken the standard deduction of 30% amounting to 33,600. My taxable income would have been 78,400. Hello? And this is pounds. And I will now convert this into by applying rupees 95. Now calculate this. Into 95 will be what? 74,48,000 rupees. 74,48,000 should have been my taxable income from this house property. If they would have asked me to calculate this amount, I would have calculated one step ahead. After NAV, I would have taken the deductions and my final income would have been this much. I hope you understood. Sure, friends. Shall I move ahead? Okay. So this was an easy question, no? You want me to show the presentation? Or you will be able to do it? Sure, no? Very good. Okay. Now, let's come to your practice questions in your test your knowledge section. In the test your knowledge section, question number 2 is done, no? 2 is done. Yes. 3 is also done. Come to question number 4. And mark this question important. Please mark this question important. Pay attention. Mrs. Rohini Ravi, she is a citizen of USA. So what? Even if she is a citizen of USA, her residency status is ROR. So she is ROR in India. She owns a house at Los Angeles, USA. Owns a house property at Los Angeles, USA, used as her residence. Can I say this house, which is in USA, is used as her residence, is her SOP? So USA house, which she is having, USA house is SOP for her because she is using that house for her own residence. So she can take the annual value of this house as exempt. Hello? Sure, no? Because annual value of any two SOPs at the option of the assessee. Any two SOPs, whether in India or outside India, will be exempt. Then next one. So the annual value of this house, oh my God, they have only calculated the annual value, which is $20,000. And the INR to dollar exchange rate is 75. So can I say the annual value of this property in rupees is 75 into $20,000 amounting to rupees, rupees 15 lakhs. Now tell me, can she claim the exemption for this annual value? Yes, very well. But if any other two SOPs are there for which she is claiming exemption, then this annual value will be taxable for her, treating this property as DLOP. But if there is no other SOP, only this SOP, then this annual value can be claimed as exempt. And one more SOP is there. That SOP and this SOP, both the SOP's annual value can be claimed as exempt. Yes or no? So in this question, she is having another SOP in Chennai. So one SOP in India, one SOP outside India, both the SOP's annual value she can claim as exempt. Now if you will see, she took ownership and possession of the flat in Chennai. Ownership and possession of a flat in Chennai came on 1st July 24. Meaning that this Chennai flat, she is owning for the first time in my previous year. And the ownership period is only 9 months. So the expected rent will be only for 9 months. Principal value, fair rent, standard rent, everything will be for 9 months. If the property is actually let out, then the let out period maximum will be 9 months. Hello? Do you remember that calculation which we did with actual rent? So those entire calculations will be applicable here if the property is let out. But what she is doing? This property is used for self-occupation, meaning that she is self-occupying this property while she is in India. So when she is outside India, she uses the US property as her SOP, and while she is in India, she uses this property as her residence. Getting my point? Now what will happen? The flat was used by her for 7 months only during the year ended 31st March 2025. Meaning that for the rest of 2 months, the flat could not be used for residence. So are they saying that for those 2 months the flat was let out? Not saying no. Meaning that for those 2 months, out of the 9 months, 7 months the property was self-occupied, and for the remaining 2 months the property was let out. Are they saying that? No. Meaning that for the remaining 2 months the property could have been under lock and key, vacant. So is she taking any financial benefit out of this property? No. So if she is not taking any economic or financial benefit out of this property can be very well treated as what? SOP. But the moment she'll let out this property, it will become LOP. But for this year, can I say April to June, she is not the owner of the property? July to March, she is the owner of the property, but July to March, she is not occupying for full 9 months. She is occupying only for 7 months and using as residence. But for the balance 2 months, it would have been kept as vacant. No economic benefit derived. Hence, this property will be treated as her SOP only. Getting my point? So, this property, can I say Chennai property? Even this property can be treated as her SOP. Now she is having two SOPs, one in India, one outside India. The annual value of both the SOPs can be claimed as exempt. Now the details are given to calculate the annual value of this property. They have not calculated, but the details to calculate that annual value is given. See, they are saying that the municipal value of the property is given 3,84,000 per annum. Ignore this. Fair rent 4,20,000 per annum. Ignore this. She paid the following to Corporation of Chennai, meaning that these are the municipal taxes which she has paid. Even this two municipal taxes will be ignored. If this property was DLOP or LOP, then these figures would have been relevant for us. But we would not have taken these figures for the full year. We would have taken only for 9 months. Property tax and sewerage tax entirely allowed. Hello. If the property was LOP or DLOP. But those figures which were per annum, no, we would have to convert those figures into 9 months. And then we would be calculating the taxable value for that property. But fortunately, we are not supposed to do this in this question. Why? Because in this question, the property is SOP. If I would have been your examiner, I would have definitely given this property as LOP and given these informations. What you would have done, municipal value, fair rent, 3,84,000, 420, whichever is higher. Then standard rent also I would have given for the full year. And you would have calculated the expected rent for the full year. Gone. It will be only for 9 months in this case. Understanding? So we are not supposed to consider this amount, forget about it. Now the important part of this question. They are saying that for this Chennai property, she had taken a loan from Standard Chartered Bank. Loan from Standard Chartered Bank in June 2022 for purchasing this flat. So can I say from June 2022 till the 31st March, immediately preceding to DOCOC, date of completion of construction or date of acquisition, 31st March. See, pre-construction interest is also known as pre-acquisition interest. Do you remember I told you? Sometimes you call it pre-construction interest, sometimes you call it pre-acquisition. So any interest which relates to pre-construction period or pre-acquisition period is pre-construction interest or pre-acquisition interest. Yes or no? Now tell me, this property was acquired on 1st of July 2024. Can you see this date? So can I say this is the date of acquisition? Date of acquisition is as good as date of completion of construction. Yes or no? Date of acquisition is as good as date of completion of construction. Yes or no? So this was 1st of July 2024. So 31st March prior to this date I have to see. So can I say 31st March 2024? So starting from the date on which the loan was taken, date of borrowing till 31st March, immediately prior to date of completion of construction or date of acquisition, yes or no? Can I say this is my pre-acquisition or pre-construction period? Yes or no? And during this period, whatever interest I have given is my pre-construction interest or pre-acquisition interest? So tell me, they are telling you that period prior to 1st April 2024. Can I say that is the period till 31st March 24? So starting from June 22 to 31st March 24, They have only calculated that interest and given to you. That is 49,200. So for this pre-construction period, yes or no? What was your interest for this period? Come on, tell me. Interest is 49,200 that they have already calculated and given. Now, will this be allowed as a deduction? Yes, but in 5 equal annual installments. So I will divide it by 5. So 49,200 divided by 5 will give you 9840. So first time you will claim this in the year in which the construction or acquisition was completed. So the year in which the construction or acquisition was completed was our previous year, 24-25. So in 24-25, this 9840 will be claimed for the first time, first installment. Done? Sure. Along with this, whatever interest which becomes due in this year, you had this doubt yesterday. Honey, you remember, no? Till the date of acquisition, starting from 1st April till the date of acquisition, and even after the date of acquisition, whatever interest is there, can I say this interest relates to first 3 months of previous year 24-25? Yes or no? And this interest relates to last 9 months, starting from 1st July till 31st March. 9 months of previous year 24-25. Yes or no? Can I say this is the interest for 24-25? This is also interest for 24-25. Whatever interest which becomes due in my previous year is allowed in my previous year only. So do I have a property in 24-25? Yes. Will I calculate the annual value of that property? Yes. Out of that annual value, whatever interest which becomes due in this year will be allowed in this year only. Whether it is from 1st July to 30th June or it is from 1st July to 31st March. I will not extend my pre-construction period till 30th June. Getting my point? And if I do it, what I am doing? I'm taking these 3 months as a part of pre-construction interest. Then it will be claimed for the second time as a part of pre-construction interest, which is not allowed. Because that is going to get claimed in the previous year 24-25 itself. So why are you making it a part of your pre-construction period? Getting my point? Hello? So entire interest, this entire interest which relates to your previous year 24-25, can I say this is normal interest for previous year 24-25? Done? So this is how much? Come on, tell me. 50,800 plus 1,31,300 will give you 1,82,100, and along with that I will add 1/5 of pre-construction interest and first installment in my previous year. Yes or no? 9840, which I have calculated below. Now add. You will get 1,91,940. Can I say this is the total interest for this year? Now what is the status of the property this year? Chennai property. This is the interest for Chennai property for this year. And what is the status of Chennai property this year? SOP. So will this be allowed? Yes, provided she is not following 115 BSc. If she is following 115 BSc, then this is also not allowed. Getting my point? So is it written? Yes. Compute the income chargeable from house property if she has exercised the option of shifting out. Meaning that she is not following 115 BAC. Hence, this interest will now be allowed. Now, this interest will be allowed subject to maximum 2 lakhs. Why? Because the loan was taken in June 22 on or after 1st April 99 for the purpose of purchase or construction. Purchase loan was there. And see, purchase got completed within 5 years from the end of the financial year in which the loan was taken. Purchase got completed in 1st July 2024 itself. Yes or no? And the loan was taken in 22-23. So 22-23, end of that year, within 5 years, the acquisition got completed. Done. So the limit will be 2 lakh. So this will be allowed fully because this is within that limit of 2 lakhs. So now if I say that how would I calculate, how would I make the calculation, how would I show the presentation? See, I will write down like this. SOP 1 at USA and SOP 2 at Chennai. Right? I will directly start from GAV. Both GAVs I will take as nil. Minus municipal taxes. Both the municipal taxes, even if paid, will not be allowed as a deduction because the property is claimed as what? SOP, no? So the NAV will be nil in both the cases. And out of that 24 clause A, 30% standard deduction, that is also not available here. And here also it is not available. And next one will be 24 clause B, that is interest on housing loan. For this property there was no interest, but for this property we have calculated 1,91,940. Sure? So this will be finally how much? This will be nil and this will be minus 1,91,940. So both taken together, now my loss will be 1,91,940. This is loss under the head house property. But wait, in that question, no one additional information is given. Okay, which I will first explain and then again we'll come back to this question. Okay, so first let me talk about that concept. Once the concept I will teach, then again we'll come here. Okay, now the concept is recovery. See, recovery of arrears of rent and recovery of unrealized rent. This recovery is happening in current previous year, meaning in my previous year the recovery is happening, but the rent which I am recovering in this year is arrears of rent of any earlier year. The rent which I am recovering in my previous year is unrealized rent of any earlier previous year. So arrears of rent of any earlier previous year, arrears of rent and unrealized rent of any earlier previous year. Everyone? Now, whatever arrears of rent of any earlier previous year you are recovering in the current previous year, what you are supposed to do, you are supposed to make it taxable under the head income from house property, but after taking 30% standard deduction and without deduction for any expense incurred to recover such rent. So whatever expenses you have incurred to recover such rent, ignore all such expenses. We will not allow. But take the 30% standard deduction in the year in which the rent is recovered. In that year, the rent will be taxable under the head house property. Actual arrears of rent recovered will be taxable in the year of recovery under the head house property. But take the 30% standard deduction. We will not give you any deduction for expenses which you have incurred to recover such rent. And see, This treatment will happen irrespective of the fact that whether you are the owner of that property in the year of recovery or not, to which such arrears relates. So this arrears of rent was relating to a property which you have long back sold. So are you the owner of that property in the year of recovery? No. But for that property, whatever arrears of rent are there, you are recovering in the current year. So even if you are not the owner of that property to which the arrears of rent relates, still in the year of recovery, even if you are not the owner of that property, still this rent recovery will be taxable under the head house property only. Getting my point? What if you are still the owner of that property? Then also it will be taxable under this head only. Getting my point? So this taxability will be under the head house property after taking 30% standard deduction, but without taking any deduction for recovery, even if the property to which such rent relates is not owned by the assessee in the year of recovery. Will you remember this? Will you remember this? Sure, no? Now, why this? From where I got this treatment? This treatment is coming from section 25A. As per section 25A, I have to give this treatment. Now, what is arrears, you know? Arrears is a rent which relates to any earlier year, which I never showed as my actual rent of that year, because I was not aware only that whether this rent I will receive or not. For example, in any earlier year, according to me, the rent has increased and now it is 25,000. And you are my tenant. You are saying, no sir, even I have read the agreement, rent agreement. According to the agreement, the increase in the rent should not be 5,000. It should be only 3,000. So accordingly, according to you, the rent is only 23,000. Earlier the rent was 20. From that, I am saying the rent should increase and it should become 25,000. But according to you, your 20,000 rent should not be increased to 25,000. According to you, it should increase to only 23,000. Getting my point? So are you ready to give me 20? Yes. But you are not ready to give me increased rent of 5,000. You are ready to give me increased rent of only 3,000. So there was a dispute for that 2,000 rupees of rent. Getting my point? You are saying that your rent increased rent should be only 23. But I am saying no, your rent increase should be only, it should be 25,000. So you are giving me 23 every month, and every month I am asking 25. So every month there is a gap of 2,000, no? For that 2,000 there is a dispute between you and me. Now tell me, if the tenant itself has disputed that 2,000 rupees of rent and I am not aware whether the tenant will agree and give that rent to me, how much actual rent I would have actually paid tax on in that year? Would I have paid tax on 25,000 or I would have paid tax only on 23,000? I would have only shown 23,000, no, which I know that even the tenant agrees and giving it to me. But the 2,000 rupees extra rent for 12 months, so 24,000, which I am not aware whether the tenant will agree and give it to me, will I ever show that 24,000, 2,000 into 12? Will I ever show that 24,000 as a part of my actual rent in that year? No. Because it is under dispute between you and me. So this 24,000 which I never showed as a part of my actual rent, now the dispute gets resolved and now you are giving that 24,000 to me. Taxable in the year of recovery. Getting my point? But when you tax it under the head house property, if this rent would have been received in that year only, where it was taxable in that year, it would have been taxed in the house property head only, no? So now in the year of recovery also, it has to be taxed under house property head only. Hello? Even if you are not the owner of that property to which this rent relates. In the year of recovery, even if you are not the owner of the property to which such rent relates, yes or no? Still this 24,000 recovery will be taxable under the head house property, because if this would have been received in that year, it would have been taxed under the head house property only. So now also in the year of recovery, it has to be taxable under the head house property, irrespective of the fact that whether you are the owner of that property or not. But tell me, if this rent you would have shown as a part of annual value in that year, you would have got a 30% standard deduction in that year, no? So would you have paid tax on the entire 24,000 or 24,000 minus 30%? Minus 30%. And there also we would not have allowed you any expense. Same logic apply here. When you charge this 24,000 in this year, take 30% standard deduction and no expenses for any recovery will be allowed. Got it? Easy? Now come to that question. In that question they are saying, she had a house property in Bangalore. She has or she had. Had is a past tense. In the past, she had a property. Where? Bangalore. Which she already sold in March 21. Meaning that in the previous year, 2021 only, she sold that property. So tell me, is she the owner of this property in previous year 24-25? No. If she would have been the owner of that property, what we would have done, in our solution, here, we would have made one more column for Bangalore property, which is missing. Because Bangalore property, you are not the owner in the current year. You have already sold in 21. Hello? Now the property, Bangalore property, of which you are not the owner in this year, for that Bangalore property, arrears of rent amounting to rupees 60,000, you are recovering them in this year, March 25. So even if you are not the owner of that Bangalore property in the current year, still the arrears of that rent, arrears of that property you are receiving in this year, no? So as per section 25A, yes or no? This arrears of rent will be taxable under the head house property in the current year. But after taking 30% standard deduction, without taking any deduction for what? Expenses incurred for recovering such 60,000. Got it? So what I will do? Am I calculating my house property income? So now what I will do? Below this, I will write recovery of arrears of rent, and that is how much? Rupees 60,000 minus standard deduction at the rate of 30%, that amounts to 18,000, and the balance is how much? 42,000, that is taxable income under section 25A. Now this recovery will be taxable income under the head house property. So under the head house property you have one loss, yes or no? Now under the head house property you will have this taxable income. Now adjust both of them together. So 1,91,940 minus 42,000 will give you loss of 1,49,940. Still you are having this much loss. Now this is your loss under the head income from house property, remaining after setting off that loss against 42,000. Got it? See the solution. only this much. Only this much. But in this solution, you will have to write down many notes. GAV is exempt. For that, you are supposed to write down a note. Municipal tax, you are not taking deduction. The municipal tax you are ignoring for Chennai property. You will have to write down a note. For this interest calculation, you will have to make a note. Yes or no? And for this 25A, you are supposed to write down a small note. So without these notes, if you will show this answer, you will get half marks. So if the question is for 6 marks, you will get only 3 marks. Because the other 3 marks will be for writing those notes. Getting my point? Will you be able to write? Sure, sir. Should I move ahead? Let's do this question. Question number 10. Because there is a concept of recovery of arrears of rent and recovery of unrealized rent as per section 25A. That concept is there in this question. So let's solve this question first, okay? Come on. Mr. Anand sold his residential house in March 24. Meaning last year only he has sold this property. Now, in June 24, he recovered a rent of rupees 10,000 from Mr. Gaurav, to whom he had let out his house for 2 years from April 18 to March 20. Gaurav was tenant to whom for 2 years the property was let out, 1819 and 1920. Now, Gaurav did not pay some rent, yes or no? Meaning, he could not realize 2 months rent of 20,000 from him, and to that extent, his actual rent was reduced while computing income from the house property for the assessment year 2021. Meaning what happened? See, I'll tell you. In the previous year 2021, unrealized rent was 20,000. This unrealized rent is for 2021, not paid in that year, but it was allowed as deduction while computing what? Annual value of this year. Done. Meaning that, can I say, in 2021, out of your annual value, 20,000 was reduced. On this 20,000, you have not paid tax. Getting my point? Now, out of this 20,000 on which you have not paid tax that time, out of this 10,000 unrealized rent recovered. And this recovery happened in previous year 24-25. In this year, out of that 10,000 got recovered. Now tell me, if on that entire 20 tax was not paid, out of that any recovery happening in this year, on that, will you pay tax? Entire 20 was allowed, you did not pay tax on that entire 20. Now out of that 20, if any recovery happening, is that amount only, no, which was not taxed earlier. Now you are supposed to pay tax on this amount, yes or no? But after taking 30% standard deduction, so tell me, 7,000 will be taxable in this year under section 25A. This will be taxable in this year, even if you are not the owner of the property in the year of receipt. The property to which this unrealized rent relates is not owned in this year. Still, this will be taxable under the head house property. Got it, everyone? Sure, easy. Next one. See, now they are saying further he had let out this property from April 20 to February 24 to Mr. Satish. In April 22, He had increased the rent from 12,000 to 15,000 per month, and the same was subject matter of dispute. Meaning that the tenant was not ready for that appreciation in the rent. The tenant was reluctant to pay that extra 3,000. Yes or no? Now, and this happened in April 22, huh? From April 22, the rent was increased. So from April 22, he was supposed to get 15, 15, 15, 15. But the tenant said, no, no 15, 15, only 12, 12. Got it? So tenant, starting from April 22, tenant paid only 12,000. Meaning 3,000 less. Starting from April 22 itself. Yes or no? April 22 till February 24. How many months? 23 months. 23 months multiplied by 3,000 will give you 69,000. 69,000 of rent starting from April 22 till February 24 was not paid. It was in arrears. It was under dispute. Now fortunately, that tenant whose name was Satish, who paid in September 24 the entire 69,000, which was under dispute. Can I say this was arrears? This was never shown as a part of actual rent. Now recovered, now you will have to charge under the head house property. Hello, sir. So can I say now for April 22 to Feb 24, how many months are there? 23 months. 3,000 per month amounting to rupees 69,000 was under dispute, meaning not shown as actual rent, therefore not taxed while computing annual value. Annual value of which year? Annual value of all these years. Yes or no? So now this 69,000 entirely, which was arrears of rent, arrears, I will write down arrears, is recovered in the previous year 24-25 in September month. Yes or no? Arrears recovered. Out of that, take 30% standard deduction. How much amount remaining? 69,000 into 30%, 20,700. You reduce, you will get 48,300. So this 48,300 and this 7,000, both will be taxable under section 25A under the head house property. Yes or no? So income from house property head, how much will be taxable? 7,000 plus 48,300. Total amount will be 55,300. Everyone. Easy or difficult? Easy, no? Perfect. Very good. Come on. Now let's do question number 11. This question number 11. Aparna co-owns a residential house property in Calcutta along with her sister, Dimple. So two sisters are there, Aparna and Dimple. Both are co-owners of a single property in Calcutta. Meaning that Calcutta property is there. Calcutta property is co-owned property. Okay. Now they are saying both of them have equal share in the property. Okay, wait. Along with her sister, Miss Dimple, where her sister's family resides. Meaning that the property which was co-owned property, in that property, Dimple's family is residing. So that is SOP. Okay. Now, both of them have equal share in the property and the same is used by them for self-occupation. Meaning that Calcutta property half portion belongs to Aparna and half portion belongs to Dimple. And both of them, Aparna and Dimple, both are occupying the property, their respective part as self-occupied. So this is SOP for Aparna, this is SOP for Dimple. Understood? Whatever interest which will be for Dimple's part, Dimple will claim within the limit of her own 30,000 or 2 lakh. Whatever interest which relates to Aparna's part of SOP, that Aparna will claim subject to her own limit of 30,000 or 2 lakh. That I have already told you. Got it? Because both are self-occupying their respective share. Getting my point? Now what is happening? Interest payable in respect of loan of rupees 50 lakhs at 10% taken on 1st April 2023 for acquisition of such Calcutta property. So what was the interest? Come on, let's have this discussion now. Can I say interest on housing loan for Calcutta property will be 50 lakhs into 10%. See, the loan was taken in 1st April 23 to acquire the property. Right? And if nothing is said, then this entire loan is still outstanding. So on this entire loan for 24-25 also, the interest I would have to pay. Okay, no? So how much was the interest? Come on, tell me. 5 lakhs. Now this is the interest for the Calcutta property, which was half of the part was self-occupied, half of the part was self-occupied, half was self-occupied by Dimple, half was self-occupied by Aparna, sorry. So out of this, half belongs to Aparna's SOP, and out of that half belongs to Dimple's SOP. So how much? Come on, tell me. This will be 2,50,000 and this will be 2,50,000. Okay. Dimple will claim her SOP as her own separate SOP. She will claim the exemption of her SOP nil, and out of that she will claim 2,50,000, but will not be allowed 2,50,000. It will be allowed only 2 lakhs for Dimple. Got it? And Aparna will claim her part as her SOP. But wait, Aparna is having one more property given in the question. See what the question says. Now the question says, in addition, Miss Aparna owns a flat in Pune in which she and her parents reside. Now Pune flat is also SOP in the hands of Aparna. So now Aparna is having one SOP or two SOPs? Two SOPs. Both the SOPs she can take the exemption. Okay. Now for this Pune property, she had taken a loan of rupees 3 lakh at 12% on 1st October 23 for repairs. Getting my point? So can I now say that interest on housing loan, this housing loan was for acquisition, and now this housing loan we are talking is for repairs. Housing loan for Pune flat. On this, come on, tell me, how much was the loan? 3 lakhs. And what was the rate of interest? It was 12%. See, this 3 lakh loan was taken last year. So if nothing is mentioned, the entire loan is still pending in this year. So on that entire loan, I will have to pay 12% interest for this year. Okay, no? So that is 36,000. Now wait. Now tell me, how many SOPs Dimple having? Only one. And for that SOP, 2,50,000 interest is there, which she will claim subject to her limit of 2 lakhs. So Dimple's SOP income will be negative 2 lakhs. Hello. How many SOPs Aparna is having? 2. One SOP having 2 lakh 50 interest. Subject to 2 lakh, it will be allowed 2 lakh. Okay. Another SOP having interest of 36,000. But from there, the limit will be only 30,000 because the loan was repairs loan. Yes or no? So this will be allowed 30,000. Now 2 lakh for first SOP, 30,000 for second SOP. Both SOPs taken together cannot be more than 2 lakhs for Aparna. Got it? End. So negative income for Aparna will be 2 lakhs and negative income for Dimple will be 2 lakhs. And see, this you will be doing only if both of them are following. No, both of them are shifting out of 115 BSc. Only then the interest will be claimed. Got it? But what if both are following 115 BSc? Then Dimple's SOP interest will not be allowed. Final income will be nil. Aparna's both SOP interest will not be allowed. Final income will be nil. Got it? But in this question, they are telling that both of them are shifting out of default tax regime. See, they are saying that both exercises the option of shifting out, meaning that both are not following 115 BSc. Hence, both will be eligible to claim deduction. One will claim 2 lakhs, another will claim 2 lakh as well as 30,000, but that will be restricted to 2 lakhs only. That is the answer given over here. Can you see 2 lakhs? This was for Aparna. And can you see 2 lakhs? This was for Dimple. Done. Everyone got this? Easy question? Sure? They will try to give such kind of many informations in the question. Try to fool you out. But don't get yourself fooled. Be very calm and focus. You know everything. That only they are going to ask. They are not going to ask you how to make rockets. They are going to ask you everything from your syllabus which you have studied and you have gone for the exam. Make yourself comfortable, make yourself calm, read the question properly, and then understand properly, then write what they want you to write. See, the problem is what, question gives you something else. You are reading something else. Understanding something else. And writing also something else. And then you expect that the examiner should give you the marks. How would he give you the marks? Read whatever they have written. Understand what you have to understand from this. And write what they are asking you. Only then you are going to get the marks. Otherwise, see, examiner does not know who you are. Which student's paper he is checking. And he does not have any, problems with you. Why would he not give you the marks? Come on, tell me. Because somewhere we are not, writing the things properly, no. And we are not sitting for our BCom exams. We are sitting for our professional exams. In your professional exams, you have to be very, very, very professional in writing your answers also. What you are asking, I understood. I will give you the answer for that only. But to give that answer, your understanding should be conceptually clear. Sure? Let's move on to the next question. Next question is, all the illustrations we have completed, okay, no? Now we are coming to the remaining questions. Question number 1, Mr. Raman. Okay. Mr. Raman is a co-owner of a house property along with his brother holding equal share in the property. So whatever income of this property you will calculate, you will divide that income into two parts, half, half. But first you will have to calculate the income assuming as if there is no co-ownership. Okay. Now this property having a municipal value, fair rent, standard rent, rent is received, meaning that this property is let out. For let out property only the rent is received, no? So this is a let out property having a co-ownership. First calculate the LOP income. And once the LOP income is calculated, then divide it into two parts. Okay. But for that, wait. Loan for the construction of this property is jointly taken and the interest charged by the bank is 25,000, out of which 21,000 has been paid. So what? Entire interest of 25,000 will be allowed. Interest is not allowed on payment basis. It is allowed on due basis. So whatever interest becoming due, 25,000 will be allowed as a deduction. Now, interest on the unpaid interest is 450. That is not going to be allowed. That is a penal interest. Will not be allowed as a deduction. To repay this loan, Raman and his brother have taken a fresh loan and interest charge on this loan is 5,000. So it is possible that the loan was outstanding since the beginning. Hello? So since the beginning till some months, the interest became due 25,000. Then that loan, which was a housing loan, during the previous year itself, some other loan was taken and this loan was repaid. So now new loan is taken during the same year. But even that becomes your housing loan, no? So now your old loan is replaced by a new loan, and on that new loan also for the current year there is some interest. Even that interest is eligible for deduction under 24B. So now under section 24B, for some part of the year, old housing loan, your interest is 25,000. And when that old loan is repaid in this year, new loan is coming. Even that new loan is a housing loan. On some part of the year, the interest is 5,000. That 5,000 is also interest on housing loan for this year. 25,000 is also interest on housing loan for this year. So for this entire year, how much is the interest on housing loan? 30,000. That will be allowed entirely. Many of you might have committed mistake here. Now you understood the logic. 21,000 they have given to confuse you. That you will apply the same logic which you usually apply for municipal tax. Don't apply that logic. No, I told you also that it is allowed on payment basis. No, due basis. So how much interest becoming due? 25,000. But this is 25,000 which is becoming due in this year. Not for the entire year. Maybe it will be due for example, 10 months. And after 10 months, you might have taken another loan to repay this loan. So that another loan also becomes your housing loan, which you have taken in this year only. But on that, for 2 months, interest will be your interest on housing loan only, no? And that 2 months interest might be 5,000. I'm just giving you an example. That 25,000 would be for 10 months. That 5,000 would be for 2 months. But that 25,000 is on in housing loan interest, and that 5,000 is also housing loan interest becoming due in this year, will be allowed in this year itself. So entire 30 will be allowed. Mark this important. Adjustment is important because you committed mistake over here. Okay. Next one. Municipal taxes 5,100 paid. If they would have given this now, I would have taken this deduction. But it is paid by tenant. Hence, it will not be allowed as a deduction. Who has to pay this? Owner has to pay. Owners have not paid. Tenant has paid. It is not allowed as deduction. Getting my point? Now, compute the income from house property chargeable in the hands of Raman. Chargeable in the hands of Raman only. And that amount will be 48,000 if I am not wrong. Got it? Let's calculate. 1,60,000 or 1,50,000, whichever is higher. 1,60,000. 1,60,000 or 1,70,000, whichever is lower. 1,60,000. Okay. So what will be the expected rent? Expected rent in this case will be 1,60,000. Now what is the actual rent? Come on, tell me. Was there any vacancy? No. Meaning that the property was let out throughout the year at a monthly rent of 15,000. 15,000 into 12 will give me 1,80,000. If there is no vacancy, AR or ER, whichever is higher, will become GAV. So my GAV will be 1,80,000 everyone. And since there is no unrealized rent given in the question, final GAV is this only. Out of that, municipal tax will be allowed or will not be allowed? Will not be allowed, even if it is paid. But since it is paid by tenant, hence we are not taking any deduction. Okay. See, whatever amount you are ignoring, no, for all those amounts you are supposed to give small notes, huh? Please remember, don't forget that. Because see, if you will just make the calculations and not tell the examiner that why this amount is not taken in your calculation, what he should understood, whether you have forgotten or you know the answer. Getting my point? You have deliberately ignored. And if you have ignored, tell them no that you have ignored. Understanding? So tell me, what will be the final NAV now? Final NAV will be 1,80,000. Now this 1,80,000, out of that 30% standard deduction, 1,80,000 into 30% will be 54,000. And friends, 30,000 interest we discussed, no? Entire 30 will be allowed. So minus 30,000 will give you 96,000. This 96,000 is income from house property for this let out property for which Raman and his brother are co-owners. So this entire income is not for Raman. This entire income is not for his brother. This income has to be divided into equal parts. Half of this is Raman's income from house property. Raman will show as a part of his total income. Half of this will be Raman's brother's income from house property. His brother will show in his total income as his income from house property. Got it? Very easy question. Very easy. But the complication they did in that adjustment given there. In every question you will say such small things where you are committing mistakes. Getting my point? Okay. So 96,000, out of this, half belongs to Raman, that is 48,000, and this 48,000 only is what? Income from house property chargeable in the hands of Raman, which we have calculated. Sure? Now let's come to the last and final question of this chapter. Then all the questions are solved. Okay, no? Come, last question. This is question number 5. And mark this question important. Very important. Good question. Two brothers, Arun and Bimal, are co-owners of a house property with equal share. So there is equal ownership in the property. Okay. The property was constructed during the financial year 16-17. Construction completed in 16-17, right? No? The property consists of 8 identical units and is situated in Cochin. During the financial year 24-25, each co-owner occupied 1 unit for the residence and the balance of 6 units were let out at a rent of 12,000 per month per unit. The municipal value of the house property is 9 lakhs and the municipal tax is at 20% of the municipal value, which were paid during the year. The other expenses are as follows. So out of these expenses, I have to ignore this 40,000 repairs. I have to ignore this 15,000 of insurance premium, but I will definitely consider the interest. Okay. Now this interest will be apportioned into SOP portion and LOP portion. Okay. And the municipal value will also be, a portion between the LOP and SOP portion. Very good, Raj Lakshmi. Very good. Correct answer you are getting. Correct. Okay. Now pay attention. One of the let out units remained vacant for 4 months. See, 6 units are let out now. All the 6 units are let out for a monthly rent of 12,000. All the units are let out for 12 months except for this 1 unit which was vacant for 4 months. So for 5 units, 12,000 rent per month you will get for 12 months. But for 1 unit, you will get 12,000 rent only for 8 months because there was what? Vacancy of 4 months. So when you will calculate your actual rent, you are supposed to keep this thing in mind. Okay. Next one. Arun could not occupy his unit for 6 months as he was transferred to Chennai. They are saying that out of the 2 units used as what? SOP by Arun and Bimal, Arun's SOP unit, Arun could not occupy for 6 months because he was transferred to some other place. That means for those 6 months, His property was vacant only. He did not earn anything out of it. So will his SOP have any effect of that? No, his SOP will still remain his SOP only. Getting my point? Because he could occupy only for 6 months, and for the balance 6 months, the property remains vacant. He is not earning any benefit out of it. So still his SOP will be treated as SOP only. Okay? Everyone, pay attention. Now, he does not own any other house, meaning that Arun does not own any other house except for this SOP portion. The other incomes of Arun and Bimal are 2,90,000 and 1,80,000 respectively. Compute the income under the head income from house property and the total income of two brothers if they pay tax under the default tax regime under 115 BSc. If they pay tax under the default tax regime, they are not shifting out. Now they are in 115 BSc. So will they get any deduction for interest on housing loan from their SOP? No. So whatever interest which will be coming for what SOP portion divided between A and B will not be allowed to them because they are following 115 BSc. Now they are saying, will your answer change if they shift out of 115 BSc? In that case, whatever interest for A's SOP was there, B's SOP was there, that interest they can claim subject to their respective limits because they are shifting out of 115 BSc. This is the second part. If both exercise option of shifting out. So what we'll do first, wait. See, I will say that there was one property, okay, no? See, let's say this is the property. In this property, 8 identical units are there, no? So 8 identical units are there. I'll make 8 identical units, okay? Now, out of 8 identical units, no? 6 units are let out. And can I say these 2 units are self-occupied, one by Arun, one by Bimal? Yes or no? Now, whenever I'll make my format no now, so I'll have to keep this thing in mind. What I'll keep in mind, please pay attention. See, this will be my self-occupied portion, which is nothing but 1/4. How come 1/4? 2 out of 8 is 1/4 only. 2 out of 8 is 1/4, no? And in this, I will make 2 columns. Arun separate and Bimal also separate. Okay. So SOP portion is further divided into Arun's SOP and Bimal's SOP. Now, I will write down let out portion also. Let out portion is 3/4 because 6 on 8 is let out. Okay, no? Here I will not do any bifurcation. What I'll do, I'll first calculate the income and then final income I will bifurcate between Arun and Bimal. Getting my point? So what I will do now, I will write down the total amounts over here. So municipal value is 9 lakhs dash dash. Here it will be 9 lakhs into 3 divided by 4. Can I do 75% also? 75% also same. Yes or no? So this will be 6,75,000. Now fair rent not given, not given. I will not write here. Okay. So can I say the higher amount here will be 6,75,000 only. Dash dash. Now standard rent is also not given. Dash 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 dash. Everywhere it is dash dash only. It is very easy question. So lower amount is equal to expected rent dash it will be 6,75,000 and here it will be dash dash. Now I will have to compare with actual rent. Now actual rent, my dear friends, how that actual rent will be calculated, please pay attention over here. Actual rent will be 5 properties, 5 units, 12,000 per month rent, let out for 12 months, full 12 months, no vacancy. Along with that, one property was also let out for 12,000 per month, and that was let out only for 8 months because there was vacancy of 4 months. Many of you might have committed mistake here. So if mistakes were committed, please be careful. This amount will be 8,16,000. If I am not wrong, please check. Amount is correct. 8,16,000. Is it correct? Please check. Done? Okay. Now I will directly say GAV. See, even if there is 4 months vacancy in my one unit, still my actual rent is higher than expected rent. Hello? Even if there is 4 months vacancy in one unit, still my actual rent is higher than what? Expected rent. Then actual rent will be taken as GAV. So I will take actual rent of 8,16,000 as GAV. Was there any unrealized rent? Sure. So now I will directly reduce municipal tax from here. What was the municipal tax? Come on, tell me. Municipal tax was 20%, no? So municipal tax was 20% of municipal value and that amount is 1,80,000. Yes or no? Now out of 1,80,000, 75% relates to LOP portion. So that will be, if I am not wrong, 1,35,000. Please check. And here it will be dash. So now my NAV will become 6,81,000 and here it will be nil, here it will be nil. Sure. Now out of this NAV, I will claim 24 clause A and I will claim 24 clause B. First one is 30% standard deduction and second one is interest. Now tell me, 30% of 6,81,000 will be 2,04,500. Oh, sorry, 2,04,300. And here it will be nil and here it will be nil. Okay. Now interest. Out of the 3 lakh rupees of interest, hello, only 75% will relate to what? LOP portion, and that is 2,25,000. And here I will not get any deduction for interest. Why, sir? Because in the starting only I will write both are not following 115. Sorry, both are following 115 BSE. Both are following 115 BSE. Hence, there will be no interest deduction for both of them. Sure. So tell me, what will be the final income from self-occupied portion? It will be nil for both of them. And what will be the final income? Here it will be 2,51,700. Everyone getting this? Now this 2,51,700 is from let out portion owned by both the brothers. And now this will be divided into Arun and Bimal in their ownership ratio, which was half equal. Yes or no? So here and here it will be 1,25,850. This will be 1,25,850. Everyone got this? This is the LOP portion income. And can I say this is the SOP portion income? So if I have to calculate income from house property for both the brothers, okay, both the brothers, Arun and Bimal. Okay. So here I will write Arun and here I will write Bimal. Okay. So it will be LOP income will be 1,25,850, 1,25,850. SOP portion income here will be nil. It will be nil. So total house property income for both of them will be 1,25,850, 1,25,850. And my dear friends, this is income from house property. In this I will add other incomes. For Arun it was 2,90,000 and for Bimal it was 1,80,000 everyone. So what I will do now? I will add both of them. Okay, plus 2,90,000 I will get 4,15,850 and here I will get 125 850 plus 1,80,000. Here I will get 3,05,850. They are telling you to calculate two things. Calculate the income from house property for both the brothers and also calculate the total income for both the brothers. This is the total income for both the brothers. Hello, sir. If they are following 115 BSc, they want to see this answer from you. Now wait, sir. Pay attention over here. Everyone, look at me. Now, if they would have followed 115 BSc, my entire calculations would have remained same. LOP, there is no problem. But in SOP, now the interest would have been allowed. Now the interest would have been allowed. So how much interest now relates to SOP? Come on, tell me. So what I would have done, see, if they would have followed, if they would have opted out of 115 BSc, yes or no? Then LOP income will remain same, amounting to 2,51,700. But the SOP income for both the brothers, Arun and Bimal, will now be negative because both are going to get interest deduction now. So out of 3 lakh, 2,25,000 was for let out portion, gone. How much remaining? 75,000. Now that 75,000 is the interest for this SOP portion. But out of that 75,000, half is for A's SOP, half is for B's SOP. 37,500, 37,500. Now don't you think if nothing is mentioned in the question, we are going to take the limit of 2 lakh only? Because the house construction got completed in 1617 and I don't think, see, my common sense says if the house construction got completed in 1617, then the loan was definitely not taken prior to 1st April 99. This much old loan cannot be there, yes or no? So the loan would have been definitely taken on or after 1st April 99 only. And the construction got completed within 5 years. I will assume that. If the construction was not completed within 5 years, they would have definitely given me such details. Yes or no? So how much limit I should take on this loan's interest if the property is SOP? I will take 2 lakhs. And that 2 lakh limit will be applicable for both the brothers separately. So 37,500 for A will be allowed separately subject to his limit of 2 lakhs. 37,500 of B will be allowed to B subject to his limit of 2 lakh. Getting my point? So can I say 37,500 will be a loss for A and 37,500 will be a loss for B also? And out of this, can I say 125,850 is LOP portion income and 125,850 is the LOP income for A as well as B? Now, can you match the columns? Color, blue color. And sir, color, green color. Can you match? You will get the income from house property. Find out. Do it fast. 125,850 and 37,500. 125,850 minus 37,500. You will get 88,350. So income from house property for Arun will be 88,350 and for Bimal also it will be 88,350. Yes or no? And both are having what? Both are having other incomes, no? What are the other incomes? Come on, tell me. 2,90,000 here and 1,80,000 over here. Can you add both of them? Here it will be 2,68,350 and here it will be 3,78,350. So what will be the income from house property if they are not following 115 BSc? Income from house property will be this much. And what will be their total income in that case? It will be this much. Sure. Please check the solution. And now see how the solution they have given and how we have done it. Easy or no? Entire question was easy, provided you are a little bit attentive in solving. Okay. If you present the things in a proper way, no, the answer will automatically become easy for you. But if presentation is not understood, no, then automatically, even if easiest question will appear difficult to you. Sure? So all the questions of house property are done. All the questions. Okay. Did you enjoy all the questions? Understood? Mark the mistakes also. Okay. ATC insurance premium paid. Deduction if 115 BSE opted out. Why are you asking that right now? ATC interest is ATC life insurance premium. See, this premium 15,000 is there, no? This premium is allowed under ATC. Okay. Right now we are not, commenting on that because I have not yet, discussed the deductions chapter. So you are correct that ATC, you are going to get the deduction for life insurance premium. But this life insurance premium will be allowed out of your gross total income. So first you calculate gross total income. From that gross total income, you will take ATC deduction. And this ATC deduction will be available only if you opt out of 115 BSE. If you opt out of 115 BSE, then ATC will be allowed. Then ATC will be allowed. But if you don't opt out from 115 BSE, yes or no? If you follow 115 BSE, then ATC deduction for insurance premium will not be allowed. Got it? So in the given question, if we want to incorporate this information also, so what we can do when we are solving what without 115 BSE, this part, green part. So to calculate our total income, we'll take insurance premium deduction also. Getting my point? Whatever insurance premium is there, ATC deduction we are going to get because we are not following 115 BSE. Done? And here, when we were following 115 BSE, at that time here, ATC deduction will not be allowed. Got it? They have not told you to calculate total income over here. See, they have told you only to calculate house property income. If they would have told you to calculate total income also, then ATC deduction would have been definitely considered. Got it? But what we have done, we have gone one step ahead and we have calculated the total income also. And since I have not, taught you deductions, hence I have ignored this ATC part here. Got it? Sure, sir? Okay.